Welcome everyone to today's Traders Exclusive webinar. We're going to be talking about trading techniques to use right now. This is Sherry, your host. Please go to tradersexclusive.com. We regularly post articles and video clips and valuable trading tips and techniques. This is also where you're going to find a recording of today's webinar. Our speakers today are Hima Reddy, Melissa Armo, Simon Jousef, and Hugh Grossman. And before we get started, I have to share the disclaimer, of course. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. And we'd like to ask that you take notes today and write your questions down with a little bit of context, because we want you to hold your questions until after the presenter is finished. It helps them really keep the thread of their presentation going. I'd love to introduce to you our first panelist is Hima Reddy of himareddy.com. She's going to give us Not Your Mama's Momentum, how to profit in any market at any time frame. She's a veteran Wall Street analyst. She's known for her uncanny predictions on market moves and her ability to make trading simple. Hima Reddy is on a mission to empower traders to take control of their financial future so that they can live with the life that they and their families deserve. I just want to say thank you for joining us, Hima. I'm going to turn it over to you. I'm going to make you the presenter, and you should have control to share your screen. Are you with us?
Yes, I'm here, just getting my screen shot and everything. All right, well, thank you, Sherry. Appreciate it. And awesome, guys. Well, I'm excited to be here today, and I want to make sure everyone can see my screen and hear me. So if you can type a Y for me in the chat, that would be great. And we will dive in. Also love hearing where traders are dialing in from, right? It's awesome that you can trade from anywhere in the country, in the world. Good stuff.
Lots of yeses coming in, lots of yeses.
Okay,
and
well,
let's see. I've got Honolulu is here. Yeah. And Ontario, awesome. And Chicago. And
so is there a way for me to see that directly or no?
No, we talked about this. Okay. It's on there for some reason. Hey guys, can you type in a chat? Are you typing in the chat, or are you typing in the questions box? And we were just trying to figure that out this morning, and to figure out how to let the presenter see your conversation. But
I'm just doing a little test type here in the chat. So if y'all type in the chat, then I'll be able to actually see it. And when it comes to Q&A time, it will help.
Do you guys have a chat? There, chat from LA. And it's coming through as questions on the organizer screen. So I'll try to relay everything as we get them in.
Well, actually, that's okay. I would rather just keep the focus on the presentation and don't worry about that. I'll just ask for typing if it chats, but I'm just going to keep counting through and only need to know if my tech goes wonky. Does that work, Sherry?
That sounds great. And I'll let you go, and I'll mute myself.
All right. Thank you so much. All right, guys. Ready to dive in? All right, for trading momentum with, oh, sorry, okay. Got a little flash on the screen there. I just want to make sure again that everybody's seeing Not Your Mama's Momentum, how to profit in any market at any time frame. All right, let's get to it. So you're going to get a sneak peek behind the one Jedi indicator that helps you accurately predict turns and large moves in any market on any time frame. So let me ask you, have you ever wondered what it would be like to have an expert analyst in your back pocket? Have you ever wondered what it would be like to finally trade with confidence? Have you ever wondered what it would be like to finally make enough with trading that you could live the life you deserve? Would you like me to share an easy way to amplify the power of an indicator that's in every single trading system out there? Would you like me to share an easy pattern that allows me to predict trends in price and momentum for you? Would you like me to share an easy way to trade futures, stocks, and options? Now, how many of you want to get as much as possible of our time together? All right, I want that for you too. For most of you here with me today, this is going to be a long-term relationship. Once I show you how simple this is, once I show you how easy it is to consistently extract money from the markets, once I show you how fast your business and life can grow, you'll want to hang out with me for a lifetime. Now, in a moment, you're about to discover how to make money with future stocks and options, even if you suck at picking them yourself. You're about to discover how to capitalize off making trades at the best prices and the best times. In a moment, you're about to discover how to catch market turns and ride the price waves up and down in only minutes a day. Would you like me to show you that? All right, awesome. So I promise that by the end of our time today, you'll know everything you need to know to pick the best trade, when to enter, and when to exit in only minutes a day. Would that be okay if I pull back that curtain for you? Great, because here's the problem. Many traders are making it way too complicated. Many traders are getting hammered by the trends because you haven't found a consistent way to produce profits by yourself. And it's not your fault. They make it complicated. As you listen to me now, know my intention is to help you fix that problem because you're ready to take action now. Notice, I'm going to be absolutely upfront and transparent with you today. I'm going to show you current case studies and figures today. As you well know, trading involves great risk, and it's your responsibility to evaluate any information, opinion, advice, or other content contained within my presentation. Your results, they're up to you guys. I can't predict them. I'm not going to predict them. And anyone who says they can is lying to you. I don't know your trading plan, your account size, or your markets. I can only show you what's working for myself and others. Your success is up to you. So who am I and why listen to me, right? If you haven't been following me for a while, here's a mercifully short introduction. So I'm Hima Reddy, and I'm originally from New York, the hotbed of the markets. Now, I started out at 16 years old learning futures trading from my dad, a successful trader in the Gann style of trading. In fact, my dad was so far ahead of his time that he got a chunk of Amazon stocks right at the beginning. Then I became a certified CMT working as an analyst at Piper Jaffray before going in on my own to help traders directly. And over the past 21 years, between my professional analysis in Wall Street and my international publications and my proprietary analysis and education, I've helped hundreds of thousands of individuals create a sound plan for their financial future. I'm an international speaker presenting to institutional portfolio managers and analysts, as well as individual traders. And I've been blessed to appear on the Wall Street Journal, Barron's, Bloomberg, Reuters, The Street, Benzinga, and all the media alphabet. I'm also the author of the Trading Methodologies of W.D. Gann. We recently just published the second edition, Trading Methods of W.D. Gann. So how did I get here? Well, that's quite a story. Is it okay if I take a few minutes and tell you my story? It'll go by like that. Okay, so here we go. Now I'm a successful trader and educator, but it hasn't always been like this. Years ago, life seemed great. I was in the center of the action as an analyst with Piper Jaffray and making a ton of money, starting work at 5 a.m., working late, and burning out quickly. Is anyone else here a corporate cog making someone else rich? I know, right? I mean, I thought there must be more to life. The money was good, but I never got to see my family. You know what I mean, right? I started becoming a ghost in my own life. I'll never forget the moment the bottom dropped out of my world, when my beloved dad and mentor died suddenly. At first, it felt like my whole world was crashing in because I had to leave my job to tend to financial and legal family matters. But then I realized that this was my ray of light, my hope to get out of the corporate grind, and I seized it with both hands. You see, while I was apprenticing with my dad to learn the markets, I had started a futures report that I called my Skinny on the Mini. It started out as just another exercise, but soon my dad started making money with it and relying on my little report. And then I shared it with other traders too, and they were benefiting. But all of that stopped when I joined the corporate world. Conflicts of interest, am I right? And all those years, those traders were hounding me to get the report back. So when I had to leave my job and take over my dad's accounts to trade for my mom's future, I realized that it was time to bring back the Skinny on the Mini and reclaim my life. So I sent out the call to my former subscribers and they said yes, they would love to get back my report that ROI'd on average 7 times out of 10. They couldn't wait to leave the hard work to me again. The result? I had time to trade my dad's and my accounts again. I started maximizing the trading methods of W.D. Gann and became the leading expert on Gann. I started teaching others the hard-earned secrets that I had learned from my late father. And in a moment, I'm going to share those very secrets with you. Because what I've discovered is that trading equals freedom. Trading equals what? Right, freedom. You know, there's only so much time in each day. And when I found the system, I got my time back and my family back, and that's freedom. Clearly, that's what we all want, right? Freedom. And wouldn't that be awesome? But clearly, there are challenges. Many traders lose money because they don't have a proven system. Trading often feels complicated and overwhelming. Often it can be confusing, right? Well, they made it confusing and complicated because you don't have a simple proven system, because what I'm about to share wasn't available until now. And now that it is, you've got to have your 4 zones RSI coverage system. And you'll immediately notice how much easier it is to make money trading futures, stocks, and options. And I'll show you that a little later. So what's different about the 4 zones RSI coverage system? The 4 zones RSI coverage system gives you my Jedi indicator and system that helps you accurately predict turns and large moves in any active market on any time frame. But more on that in a bit. First, we're going to dive right in. So trading momentum can be easy, but first you need to understand how it works. A Formula One car racing track will have you understanding momentum in no time. So let's put ourselves in the driver's seat of that hot red car at the starting line, right? You're at the starting line of the track, you rev up your engine and you go. You pick up speed really quickly or accelerate on the straight runs of the track. Then you see a turn coming up and you prepare accordingly. You ease off the gas to slow down or decelerate, even if it's just a little bit, so that you can have more control as the car whips to the other side of the turn. Then after you make the turn and the road straightens out again, you hit the accelerator once more. So are you getting the idea of how you'd accelerate and decelerate on this track? Well, now you know exactly how price momentum works. Now let's jump into the helicopter that was looking down on the racetrack and get a bird's eye view of the track. You see, the racetrack, as you see here, becomes price as you see it on your charts. And momentum is generally plotted on the bottom as a subchart. Making sense? All right, so when price is trending higher, you've got upward momentum that's improving. That upward momentum generally begins to slow down and peak before price does, making momentum a leading indicator. Are you getting this? All right, now, during falling prices, there's falling momentum that's becoming a more and more powerful force. But when a price bottom is approaching, you usually see momentum bottom first, ahead of price. Therefore, momentum indicators can warn you about hidden strength or weakness, giving you a heads up, especially when it comes to potential market turns. Making sense, guys? All right, type a Y if you've got it. All right, awesome. And now we're going to dive into the indicator. But first, let me share with you results from our trading family. Hima, I value your insights. Your momentum indicator is an integral part of what I've put together. I believe I'm ready to go from paper to live trading, said Jim. Now that we've made momentum easy to understand, in a moment, I'm going to show you how you can make money trading momentum. But first, do you guys want the Jedi Secret? My Jedi twist on a momentum indicator that's in all your platforms with my unique twist to it? Awesome. All right, I'm going to let you peek behind the scenes of my trading and show you how momentum moves through markets that you know using my special Jedi indicator. And that indicator is called Rsi Power Zones. And you can use it on any active market in any time frame. Now, an active market is a market that has enough volume, enough liquidity that you can get in and out of trades easily. Right? You're not waiting around for minutes and longer for your trade to be filled. Any time frame is any way that you're plotting your price data where each bar or candlestick represents equal amounts of time, whether it's a month, a week, a day, or any of these intraday settings. So I want you to take a look here, all right? Do you see these indices, stocks, ETFs, bonds, FX? There are so many different asset classes that have active participation, and you can use Rsi Power Zones on any of them. Maybe you trade one of them. So go ahead and drop that in the chat. If you trade one of these types of markets and your time frame, these are just a sampling, right? You might trade a 3-minute chart or 1-minute chart or 240-minute chart. This works on all of those. Now, we're going to look at the RSI Power Zones come to life for the first time on a commodity that I know you're all used to looking at, whether you trade it or not. Because in the real world, you're aware of it, at least at the gas tank, and that is oil. Now we're going to look at it on a monthly chart because I want to show you how even for the big picture, longer term trends, the RSI Power Zones can really help you out. So whether you actively trade oil or not, maybe you're just aware of it at the gas tank, right? It's important to monitor. So here's the RSI Power Zones at the bottom of your chart. And you can see there's these four zones, these four pairs of colored lines. The two lower red lines are the RSI Bear Support Power Zone. The two lower green lines are the Bull Support Power Zone. The two upper red lines are the Bear Resistance Power Zone. And the two upper green lines are the Bull Resistance Power Zone. Now, looking at all of these zones, we're going to look at the history of price action versus what happened in the RSI Power Zones, going back over 10 years here, right? So first there was this run up in price that took us to these crazy new highs above $200 a barrel. And that strong advance higher in price was accompanied by the RSI Power Zones on oil rising from the Bull Support Zone to the Bull Resistance Zone. So that's the first aspect of the RSI Power Zones that's different than the traditional indicator. Generally, strong markets and bull markets will move between the bull zones. And this is exactly what was evident on the monthly time frame that could help you navigate future price action. From there, the market had a very sharp fall, and it ended up taking out a previous low in price on the monthly chart. And when it did this, you can see here that the RSI Power Zones fell to the Bear Support Power Zone. Now, I was an analyst on Wall Street, as I said, at Piper Jaffray, now Piper Sandler, watching and analyzing oil and many other markets. And I told folks, hey, I don't think this is one that's going to be a one and done fall here. I think oil is going to be in trouble for some time. And very few people believe me because they're just like, nah, there's no way oil is going to fall below $100 a barrel and stay there. Are you crazy? Well, it sure ended up that way. First, we went sideways for years, giant sideways range. And this was a very interesting trading range because every single time price formed a high, which is noted by these yellow vertical lines, the RSI Power Zones were capped in the Bear Resistance Power Zone. This was another clue as to the future direction of the breakout. And after falling to $100 a barrel, people thought, again, there's no way it's going to fall lower. Fine, it's consolidating now. It's going to climb up for here. Not so much. We had another drop, and it was quite substantial. It had two moves lower to it. And both of those lows, highlighted here in yellow, had the RSI Power Zones push down into the Bear Support Power Zone and continue to pressure into there. This made it easy to maintain the selling mentality instead of getting excited every time the RSI got to some random level down there called oversold. All right, so from here, was there a recovery? Absolutely. But even that recovery, looking at the first leg of it, capped at the Bear Resistance Power Zone. And this continues on with this active commodity in the monthly chart, and you can see this type of relationship between my Jedi twist and momentum and price in many, many other markets. Okay, this is to walk you through and show you in a market you're familiar on how to look at this new indicator. Can you see how looking at the RSI Power Zones on oil might have helped you better navigate trades in oil or even the markets that are related to it? Okay, type a Y in the chat if you see that. All right, awesome. Now let's look at it again. It's a different combination. Let's take another popular market, an ETF that I know many of you trade, and let's look at it in a weekly chart. So here we've got the SPY chart, S&P 500 ETF, okay? This tracks the S&P index. And here we have every candlestick now representing 1 week of price action. So take a look at the history I've shown you here. Notice there was sideways price action on the SPY for a couple of years, right? It all had this boundary with this dashed vertical line. Then price broke higher, and when it pulled back to where it's highlighted in yellow, this was an opportunity to be ready to go long if you were looking at the RSI Power Zones. You would not have seen this had you been looking at the traditional RSI. It's just not there. But if you're looking at my Jedi twist on the RSI Power Zones, you would have been ready for this. And this ended up being the beginning of a substantial move higher, huge advance. And that whole advance saw the RSI continuing to improve, ultimately reaching and extending beyond the bull resistance power zone. Again, this movement from one green zone to the other, it helped you stay looking at the long side, looking at buying the moves in the strong advance. Well, then what happened? There was this very sharp drop, as you can see here, and in 2 weeks' time, took out the price action of the past 10 weeks. But all of that happened with the RSI Power Zones simply going from the bull resistance power zone down to the bull support power zone, relieving itself of overbought conditions, sort of taking a breather, taking a pause in the race. And when I was writing the skinny on the mini and putting out market analysis at this time, everyone's kind of freaked out by this condition in the markets and this price decline. But I said, hey, I think it's just a sign that we're going to go sideways for a few months and then the uptrend will resume. And that's what happened. Price went sideways, showing tradable moves, because remember, each of these bars is 1 week of price action, which you could have taken advantage of on the daily or intraday. And all of that was with the RSI Power Zones just unwinding overbought conditions, just standing a little bit longer in that water break. From there, they had a break higher, and it coincided with the RSI Power Zones resuming higher once again. And these relationships between price and the RSI Power Zones are evident in a variety of markets and timeframes. All right, so we're going to continue to dive in. I want you to type a yes for me in the chat if you're seeing how this Jedi twist on a momentum indicator that's sitting there in your platform could really help you. Awesome. All right. Now we're going to dive into the trade setups. But first, let me share with you more results from our trading family. Susie shared, my first month using RSI Power Zones was also my best trading month so far. All right, by now you're getting it. So we're going to dive into my proprietary 3-step approach to using RSI Power Zones to finding great trade setups. I'm going to show you actual setups that I use and share with my trading family. So here it is, using RSI Power Zones to identify trade setups. There are 3 steps here. You'll want to write these down. Step 1, review the chart and assess the price trend. Now you might be like, hold up, Hima. All this time you're getting all jazzed about momentum and now you're talking about price as the first step? Yeah, absolutely. Because price is king, guys. Price is the source of data from which momentum is derived, and we will benefit more from trading momentum if we are aware of and clear on the price trend. Now, when you make this assessment, and I'll show you how in a moment, you'll have 3 choices you end up with. Uptrend, downtrend, or sideways. And yes, sideways is a type of trend. And you can be prepared for the next directional move out of a sideways market if you know how to monitor the momentum of a sideways price set, all right? All right, step 2, evaluate the RSI Power Zones reading. This is specifically looking at the RSI value relative to the 4 power zones. So each zone has a distinctive upper and lower border, and there are 4 total zones, right? This means that there's some white space, some gaps in the RSI Power Zones, and it's important to know if the RSI is currently in a zone or moving out of a particular zone, or if it's just hanging out in that dead space in between that I call no man's land. And we'll see that in our examples coming up. Now, determine the presence of an entry signal between price and momentum. And usually, remember, the best signal comes from when momentum and price are actually not jiving together. When they're moving together, there's generally not a lot exciting happening. Market's just going in one direction or the other. But it's when they disconnect that you can take advantage, whether it's a trend reversal or trend continuation. All right, so you've got these 3 steps to using RSI Power Zones to identify trade setups, and I'm going to repeat the steps a few times here now, so you're gonna have them down pat by the end of our training. And the best way for you to learn is by actual examples. And you know, something I really pride myself on is that I practice what I preach, and I share that analysis with you. So traders in the Hima Reddy tribe get updates from me, and my members get even more detailed updates. And every single example we're about to look at here, every case study, I called out to my members as it was happening. I didn't just have it tucked away in my back pocket to pull out as a textbook example later here for you. All right, anyone can do that. I'm going to show you now the actual calls I made live at the time they were happening. So I want you to type a Y in the chat if you understand the value of that you're actually seeing calls I made and seeing the underbelly of them. Okay, awesome. We've already covered a couple different types of markets and time frames here. Let's continue on with that. Let's look at stocks, any stock traders here. And let's look at this in a daily chart. So Netflix is a market I get asked about a lot, especially traders who trade the FANG complex, right? So the first thing we do is the same 3 steps that I showed you. Review the chart and assess the price trend. So I want you to follow along with me. Take a look all the way back in the chart. And for a daily chart, I recommend looking at least 6 months worth of price action. Do you see this little high here from the data I gave you? That was the high at the early side of the chart. Then we traded down to this low. Then we came up to this high, pulled back to this low, came up to a new high once again. And based on the current data I'm showing you on this chart, we're sitting at this potential new low. Take your best guess as to what this trend is. That's right, that's an uptrend. And it's an uptrend in price with a corrective pullback in motion, meaning a temporary move against the uptrend, but not necessarily negating the uptrend. Awesome. Now step 2, evaluate the Rsi Power Zones reading. Here, it's holding the bull support power zone. See how it's between the 2 green lines and starting to turn higher? We have that in conjunction with an uptrend, so that's a good sign that we might have an opportunity to go long. The actual opportunity, though, is created when there's an entry signal between price and momentum. And remember, I said that the best opportunities come when the 2 are disconnected. They're not moving in sync. And that's exactly what happened here. So the results of this move and the results of that setup brought us to this new advance higher. And I want to show you the money because this is quite a move. There was a low at 271.22 and a high at 423.21 within months, creating a 56% move higher. And I have a whole training that dives into Rsi Power Zones for true mastery. And I'll show you this signal in module number 2, because I can't teach you everything you need to know in under an hour, right? It would do you a disservice. It would shoot you in the retirement. Yes, I said it would shoot you in the retirement. Money isn't just money, guys. It's the blood, sweat, and tears that it took you to make it. And you can't afford to lose any of it. I'm here to help you maximize it. And of course, I can't teach you everything that I've learned in 21 years in under an hour. So warning, don't do this at home without help. After all, that's what brought you here today. If you could do this without help, you wouldn't be here. So in a moment, I'm going to show you what you've been missing, and then we can look at how I can teach you more in depth. Making sense? Are you getting this? All right, type a Y if you understand, because we're going to dive into another one of the markets you guys asked me about. All right, awesome. Here's another daily stock chart, and this happens to be Twitter. Now, what I'm going to show you here on Twitter is a completely different approach to using momentum that you've probably never seen before. Now, we follow the same steps. Review the chart and assess the price trend. We have a high back here, a low. Higher high, higher low. Higher high, higher low. So yeah, again, this is an uptrend with a corrective pullback in motion, right? We're not at the new highs in the uptrend, but we're in that period where it looks like it may want to resume higher. Step 2, evaluate the Rsi Power Zones reading. Here it's in the bull support power zone. Now it did push slightly lower, but overall it's lifting up, and currently, right? You always want to look at the current reading. It's in the bull support power zone and attempting to move higher. Now here's the really cool twist, guys. Not only does the use of my Rsi Power Zones help you stay on track when the market's in a strong bull or bear move, here, in this specific date of this arrow, you could have calculated a target for 39.13. The date was April 10th. And I actually did this calculation live in front of members in a review session that I had with them, all right? Now we calculated that Twitter would trade up to 39.13. Here's what unfolded. Based off this signal between price and momentum, the low that was at 26.60 on April 4th held. Price did continue higher from April 10th, and it met the target on June 5th, precisely. Kept going higher from there. Again, I have a whole training that dives into all 4 of the Rsi Power Zones, and I'll give you that signal in the system. I'm just showing you here what you didn't know that you didn't know. That trading can be simple when you follow the expert. Making sense? Are you getting this? All right, let's look at another chart. Let's check out FX. Maybe we have some currency FX traders here, right? $1 trillion market. So here's one of the major FX pairs, Swiss franc. Again, we follow the same steps, rinse and repeat. Review one, or step one, review the chart and assess the price trend. There's a high, there's a low, lower high, lower low, lower high, lower low, lower high, lower low. So what's the trend here? That's right, that's a downtrend. And there's no corrective bounce or anything like that happening right now. It is just down, down, down. Now, just because it's down doesn't mean it will stay down forever, but that's the first piece of information we want to make sure we have. Next is to evaluate the Rsi Power Zones reading. This should sound like a broken record, guys. All right, same steps you just deploy over and over. Now here, you can see that there was a move down from the bear resistance power zone to the bear support power zone. And the RSI is trying to relieve itself from that area. So with this downtrend in price, RSI Power Zones had been sort of living in between the 2 red zones. Do you see that? All right, now step number 3, determine the presence of an entry signal between price and momentum. You got it. Now the disconnect here was a warning that the trend might be changing, not continuing down. Remember in the other 2 setups we just looked at, it was an uptrend and we're looking to continue to buy. Here was a warning, and this is a defensive play so that if you have a short on, you can protect your profits. And then depending on what unfolds, be ready for a move higher if that in fact happens. And this is what unfolded. Monster move that went from 0.9186 up to 1.0050. And if you know your FX, you know that that's a big move, and that's actually an $8,600 move just on one contract. And I called it and shared it with the tribe as it was happening. I'm very excited to be sharing this with you today because I'm really passionate about the work I do to provide traders the best analysis and education to trade the markets so you can take control of your financial freedom and live the life you and your family deserve. So by now, you know that power zones on the RSI can really boost your trading. Because whether you're new to studying momentum or been doing it for years, this approach can really help you extract more profits from the markets and be more consistent. And consistent profits is what it's all about, right? Making sense, guys? Are you getting this? Type a Y if you want more consistent profits. All right. That's the results our trading family loves to see too, like David. I installed the Rsi Power Zones indicator, and it's just amazing how accurate it is. On all markets, it actually gives advance warning before the price moves. So let me ask you, did I provide value for you today? Did you learn? Are you ready for more? Awesome. Then it's time to master RSI Power Zones. So far, you've heard about how I've come to really benefit from the Rsi Power Zones. Here's what more of my students have to say. I was very impressed with the education Hima provided that came with my indicator. Hima's Rsi Power Zones indicator has become the standard on all my charts, said Rob. Norman shared, a day after learning one of Hima's Rsi Power Zones trend continuation entry signals, I tested it out in a 5-minute chart of Tesla. With this one trade, I made over triple digits, covering the cost of her newest course. I got your Rsi Power Zones training, and the next morning in the market open, I found UNH as a short candidate using the weekly chart. By the time I sold the position, it nearly paid for the whole course. Thank you for sharing your knowledge and keeping your content reasonably priced, said Aaron. So will you be our next success story? Making sense? Are you getting this? How simple it can be to trade when you have help? Great. So imagine and picture this. You finally able to turn your trading around and make money with trading and live the lifestyle you've always wanted. Giving back to your community the ways you've always wanted to. Sounds great, right? Spending all the time you want with your kids and grandkids. Great. So here's what I've got for you. This system that can give you all this is the 4 Zones RSI coverage system. Now, before I give you this opportunity, let me show you the features and benefits using this system will give you. Rapid results. You can learn to use the system in as fast as 60 minutes and you'll be up and running. It's perfect for any account size, $5,000 or $10,000 or $100,000 or $1 million or more. You can trade this. You can pinpoint your trades faster, so it takes less time. Get more profit because it's perfect to add to whatever you're doing right now. Perfect for beginners, so easy that anyone can do it. Perfect for experts to diversify their accounts because the 4 Zones RSI coverage system gives you all this. But first, who is this not for? This is not for those who are trying to get rich quick. Like anything worthwhile in life, trading takes consistent work to get consistent returns. So if you're here to play the slot machines, this is not for you. So who is this for? This is for those who are ready to analyze the markets like the expert to optimize and boost their trading. This is for those who want to diversify what they're already doing for additional profits. This is for those who are ready to step up and take action for their own financial freedom. So since you're still sitting here with me, you're taking the time to learn to boost your trading, you're ready to take action now because it's time to remember what you forgot to remember. You can let it be easy. In my 4 Zones RSI coverage system, I give you my 21 years experience on a silver platter, and it's 100% focused on step-by-step systems, instantly accessible, starting with video tutorials, where I take you by the hand and you move through the 8 phases of a trade, so that you have a complete system to your approach so that you minimize mistakes. I give you my top RSI Power Zones trading signals from years of study and observation, with various real-world examples across multiple markets and timeframes. I walk you through the best entries, exits, and protective stop strategies so you can extract the most profit from the market using RSI Power Zones, and much, much more. To make it even easier, you'll also have cheat sheets that you can download and print out and keep right by your trading desk. Now, this is something I loved back in middle school. I remember learning some science concepts and then being quizzed a couple days later. The teachers that let us have that cheat sheet for formulas or definitions, they were aiding our learning and helping us accelerate faster. And that's what I want to do for you. This is for you to move faster on your path to boosting your trading account using the RSI Power Zones. So here's an example. You'll get a grid like this, and it'll be filled out with the step-by-step strategies for you to use. There's a whole packet of them, and I want you to print those out as soon as you sign up. Awesome. Now, you're really gonna love this, okay? This is the very thing everyone's always pestering me to get, but I had to have it specially coded for you. I'm also including the RSI Power Zones themselves. The indicators programmed to the exact settings that I use, and it's available for all the platforms listed here. TradeStation, Thinkorswim, NinjaTrader 7 and 8, MetaStock, MetaTrader 4 and 5, eSignal, Ensign, Sierra Chart, Trade Navigator, TradingView. Plus, we have the settings in the system in case you use something else to plot your charts and want to set up RSI Power Zones there. Now, I've had many traders email in and offer me hundreds of dollars just for the indicators alone, and I'm giving them to you here as part of the complete system. Now, I've included everything to set you up for success. The only thing you could possibly still need is for me to take you by the hand personally and help you. I mean, actually, would you like that? Would it help if I hopped in the computer with you and showed you live how it's done and answered your questions right there on the spot? Okay, then. I'm giving you everything, including me. Monthly group coaching for life. Once a month, you'll get together with me online and we'll personally spend an hour together. And I will walk you through the markets and what's going on right now, doing analysis on your tickers with open Q&A to help you become the trader that you want to be. Making sense? Would you like to get your hands on that? All right, great. I've got it all ready for you. The 4 Zones RSI coverage system with the on-demand video tutorials where I take you by the hand through how to best trade with the RSI Power Zones is valued at $1,997. The cheat sheets that you can use as a daily trading guide to learn the system faster and more easily is valued at $197. Monthly group coaching live. This is priceless, guys. But if I had to put a price on it, this is easily $797 just for the first couple months, because I easily charge $500 an hour for my one-on-one coaching. But you get me here for life. And the Rsi Power Zones indicator, available for the most popular trading platforms with free updates for life, is valid at $497. So the total value is $3,488 and is worth every penny. And let me ask you, if all the system did for you is help you trade an additional market this week, would it be worth it? Yes. If all the system did for you is help you finally make money trading with momentum, would it be worth it? Absolutely. If all the system did for you is help you make so much money with trading that you can quit your job, travel the world, and live the lifestyle you deserve, would it be worth the investment? Of course. The total value of the system is $3,488 because I want to make an investment in your future, because I want to see a return on your investment fast. For a limited time, I'm making this system available for one low, easy investment of $297. And you can get started now by heading to himaready.com/RSI. And I'll make it even easier for you. When you visit himaready.com/RSI and invest in this system today, I'm going to give you all this because I want to see you finally succeed in your trading. So I'm giving you our personal 100% satisfaction buy it back guarantee. Take action now, use the complete package for 90 days, and wear the tires off the system, guys. If you aren't 100% satisfied with your investment, then I'll give you your money back as my gift to you. I want you to be 150% satisfied with the 4 Zones RSI coverage system. And after all, my clients tend to stick around a long time and become my friends too. So follow the whole system, okay? I want you to get out there and treat it like a rental car. Put it through its paces, drive it all over the place, wear the tires off of it. And if you don't feel you've gotten far more than your investment, then I'll hop on the phone with you, personally work with you, and what I really want is for you to be totally satisfied, and that's what we guarantee. If that still hasn't happened, then I'll give you your money back. Simple as that. Again, the total value of the system is over $3,488, and for a limited time, I'm giving it to you for the simple, easy investment of $297. So go ahead and take action now. And let me show you exactly what will happen when you join us. You'll immediately get a login access email with details to enter the Rsi Power Zone system at my educational portal. All the training you need is right here, where you can get to it easily and get started right away where it says start here. And what's all this other cool content in the portal? Undisclosed bonuses, and you're gonna love it, right? We love to over deliver. You need to take action now because this offer is only available until 10 p.m. Eastern tonight. So go ahead and visit himaready.com/RSI to take advantage of this limited time offer and get my entire system for just $297. Yep, absolutely. I have time for some Q&A here. I think I have a couple minutes and Sherry can help me out with any questions that might be coming in.
All right, can you hear me at all?
I can.
All right, we've got a couple questions for you. One is, how much does the RSI Power Zones indicator cost?
So the Rsi Power Zones indicator cost is more than what this system would cost if I have it for you separately. It's important for me that you have the education that goes with it. So it's available with the system.
All right. And I have also, will this work for scalping on SPY, working off 1 minute chart?
Yep, since the question is about the SPY, which I know is a very active market, yes, you can use this on a 1 minute chart. But I teach you in this system the optimal time frames, and you can always use a higher time frame for a stronger setup and then use your 1 minute chart to scalp that.
Sweet. And will it work on DisNat Direct?
I don't know what that is. Is that a charting platform?
All right, Larry, you're going to need to reach out to Hima and they will be able to tell you more about it once you share what DisNat Direct is. And with that, we have 1 more minute. If you want, it's a Canadian platform, says Larry.
Well, I'm not familiar with it, but even if the indicator isn't one we have to download into there, we give you the settings for the Rsi Power Zones so that you can work with your software to adjust the settings to look just like my Power Zones.
So really, $297, you can try it out, and if it doesn't work, you get your money back.
Sure, absolutely.
Yeah. And one last question we have time for. Can you use this intraday trading futures like NQ?
Yes, and actually, I put out multiple times a week ES, so E-mini S&P 500, and NQ, so that's the E-mini NASDAQ research, multiple mornings a week before the trading day starts. So that skinny on the mini I talked about, even when I shared it with my dad, literally 20 years ago, I had the RSI Power Zones on there, and it's still on there now. So you'll see the ability to take advantage of another special offer to sign up for my research service once you invest here. And that's where you'd get my NQ research, or you can use the RSI Power Zones on it directly on your own, for sure.
All right, fantastic. All right, that is wonderful. I appreciate you being with us, and I'm sure I would love to have you back again sometime in the future for sure.
All right, thanks, Sherry. It was good to be here. Hope everyone has a good rest of the day, and look forward to seeing you guys in your 4 Zones RSI cover system. Remember, this is available until 10 p.m. Eastern, and I'll catch you on the inside.
And I did post that link so everybody can just click it and go directly to the offer. So thank you so much. Have a great day.
Thanks, you too. Bye-bye.
Bye-bye. All right, folks, I think I have, I need to find my presenter. She may be signing on in a moment. Let's see. There she is. She just came online. Melissa, can you hear me? Your microphone hasn't shown up yet. Melissa Armo is joining us now of the Stock Swoosh. She's going to be talking to us about trade on the side of institutional money. She's the founder and owner of this international educational company called the Stock Swoosh. She teaches people how to successfully trade in the stock market. And the method she teaches is one she created and owns. It's unique to the Stock Swoosh LLC. The method is based on one strategy called Golden Gaps, which pinpoints institutional money in the stock market. So I really appreciate her joining us. And she's trying to connect. I see her microphone now. You're self-muted, so unmute yourself and I'll turn you into a panelist. All right, so everybody, if you share your screen, Melissa, you'll be able to, and you're gonna have to unmute yourself. You're still muted. There you go. I see you now. Can you talk?
Sherry, I have no sound.
Yay, we got you.
But I have zero sound.
I can see your screen.
Speaking. If you can hear me, that's okay. Then I can speak, but I have zero sound.
Uh-oh. We can hear you.
If you want to just let me know if anybody can hear me. If you can hear me, I can speak. If you can see my charts, I can speak.
All right, let's see. I'm going to send it to the presenter.
Is anyone even there?
There we go. I just sent you a
you
chat.
Can hear me,
Everybody,
great. I couldn't hear a thing, so we're going to go with it. We're going to roll with it.
Okay. Have a good day.
You can hear and see, and that's all that matters. Welcome, everyone. Today I'm going to talk about institutional money. For those of you that don't know, my name is Melissa Armo, and I own the Stock Swoosh. And I decided to do something different today. I'm going to just talk the next, half an hour, 45 minutes, whatever time we have here today. And I'm going to discuss charts, and I'm going to go over charts. And specifically, I'm going to talk today about GameStop, because that has been a very popular chart and a very popular stock in the last 2 weeks. So normally I would do a PowerPoint presentation, but I thought I would just look at charts today, and most importantly, the daily chart, which is what I use to make my trading decisions. Now, for those of you that don't know what I do is I get up in the morning in the pre-market, way before the market even opens, and I look at what stocks are gapping. Now, for those of you that don't know what a gap is, I'm going to show you right now. Right now, I have up the QQQs, and a gap is the difference between the close and the open. That's it. Okay, gaps happen in the post market and the pre-market. Now, again, the theme for today's discussion is I'm going to talk about institutional money, and specifically GME, which I'm going to bring up in a minute here, because I think it's a great example to talk about institutional money and the control of that. But just to do a brief little lesson here about what a gap is. A gap is a difference between the close and the open. So yesterday, the QQQs closed at 327.68. Okay, there you have it. Then it opened, gapped up today on Wednesday. This is 2-2, gapped up here in this morning, okay, and opened at 329.82. So this is a bullish gap, okay? You could go long here the market today. Looks like we're going to pop, we're going to make new highs. People are shorted this today. That's a terrible idea. Despite the fact that we're red on the day the market's going to lift, it's going to make a brand new all-time high probably in the next 24 to 48 hours, okay? But you also have bearish gaps. And again, for those of you that don't know me and what I do, I really like to short. The reason I prefer to short is because short moves happen quickly. They happen very, 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 very fast, okay? So I like to be in and out of trades quickly. Not that I don't go long, I do go long, okay? Again, like I said, you could be long here, the market. I called calls in the SPY yesterday, and the market rallied yesterday. We went long the SPY yesterday as a day trade too. So I will go long, but I prefer to short because moves to the downside happen faster, quicker, okay? Because there's panic that comes in when something moves to the downside and people panic and sell, whereas there really isn't that much panic when something's moving higher. There is something called panic buying. Again, we're going to talk about the GameStop in a minute, but panic buying is rare. It's so rare that it almost never occurs, okay? Now, getting back to looking at a bearish gap, because I just showed you an example of a bullish gap, which is a Qs from yesterday to today. Let's look at a bearish gap. A bearish gap happened back here from 128 to 129. This we shorted. This was last Friday, okay? So the market closed at 321.32. Boom, open in the morning down here at 319.58. Okay, see it? So this is a bearish gap. This is a bullish gap. This is a bearish gap. Got it? Now, the conversation today and what I'm going to talk about is, and what I focus on is institutional money. What do I mean? I mean hedge funds, big banks that take positions in stocks in the market, funds, big professional traders. And the reason that I thought we would use GME as an example here today, one, because it's been talked about so much, but two, because of the fact that it's a great example of the push or the fight or the tug of war between retail traders and institutional money. And again, if anybody has any questions, you can just plop it in the room. So when I saw what was happening here with this stock, hold on here, this is loading. When I look at something and I'm reading it and I'm trying to determine again if it's going to move higher or if it's going to move lower, I'm looking for what? I'm looking for institutional buying or I'm looking for institutional selling. So say, for example, if you want to make money going long, you have to go long something that is being bought by institutional money. If you can do that before the move comes in, before the buying comes in, it's very easy for you to make money. Again, going back to the example of the market, here actually, I'll pull up the SPY here. This was an example where you could have gone long yesterday. We went long yesterday. You're having the follow through today. And again, you could have gotten out of this yesterday as a day trade. So you want to go long something that's being bought by institutional money. The market is getting bought. Again, the Qs are at the high. The Qs are going to push over the high. When I say the market, I mean the QQQs or the SPY here. The SPY is the ETF for the S&P. When you want to short, you want to do what? You want to short stocks that are getting shorted by institutional money, or you want to short selling action, okay? And again, I'm just going to give a very basic definition here. This is taking forever to load here, the SPY. A very basic definition of shorting is when you're betting that the price is going to drop. You're betting that the price is going to fall. Say you short something at $100 and the price drops down to 98. What can you make? $2. $2 times whatever the quantity of share size that you have, depending on if you're doing an equity trade or if you're doing an option. And again, I do options and I do day trades. Okay, here's the buying. So again, this is institutional buying. Does everyone see this? What occurred? Market gapped up. This was Monday. Closed. Market gapped up Tuesday. Closed. Market gapped up today, Wednesday. We're not closed yet. We're running up. Time of the day is 1:55. I don't know where we closed today, but it looks like we're going to close today with a green body and lift. So here is the market. This is going back all the last couple of years. This drop off here was a year ago almost with the COVID, okay? This is bullish. You can see here, there's institutional buying that's coming into the market and lifting it. Is everybody with me so far? Now, let's go to the Gamestop. And again, the reason I'm going to discuss this today, because there has been so much discussion about this. I talked about this on TV in the last week. I think every single news network has been discussing this. I'm not going to get into the politics of this, but the long story short is, if you don't know what's going on with this, I'll just briefly tell you. This was a stock that was previously, actually, let me squish this and take off this last, let me just take off this last week. Oops, now hold on, let me get it off. I just want to take off the trading from the last week. I think I can. There, you see that? I just took off the last week's bars because I wanted you to see what this looked like without it, okay? Without the rally. What happened here was this stock was trending down, down, 2015, 2016, 2017, 2018, 2019, even into 2020, okay? Even into December of 2020, this stock in GameStop was in a downtrend. Okay, does everybody see it? Then what occurred? Some buying came in. Let me see if I can get this up. Slowly, and then poof. This is where the stock then lifted. It lifted over the high. This was Friday the 22nd here of January. It lifted over the high, and then it had this massive move up here. And then this is the last week of trading, just so everybody can see it. At one point, it was, well, actually, you can't see this here in the pre-market. I'll show you in a minute. But it actually got over 500 in the pre-post market at one point. So what occurred? Like, what happened here? What was the talk of the town with this? What was going on? Well, everyone was saying that a hedge fund was short this, and that retail traders squeezed the shorts out, popped over the high, blew up, and the stock went from, and you can see this in here, just going back the last 2 weeks, the stock was down in here in the 30s, and again, ran up almost to 500 here in the day, but it was at 500 in the pre-post market, just so you know. I'll show you that in a minute. What can create a move like that? You say, well, it's got to be institutional money, Melissa. It has to be because it had a big move. No, it wasn't. It was actually a bunch of retail traders that got together on Reddit that decided to buy the stock. And then as a result of the buying that came in, there were short positions in it that had to cover. And when you exit a short, you buy to cover. And that's what happened then, that ended up squeezing the shorts, and that lifted and pushed the stock even higher. Now, when you're looking at this, you say, now, does this mean that it's higher? Is it going to go higher? No. Why? Because you don't have any professional buying coming in here. So some retail traders lost in this already because they bought the stock up here way too high of a price in the 300s and the 200s. As you can see right here today, the stock is trading at 108, 107. In fact, today's low ended up being like 85. Yesterday it was down in the 70s. When you're looking for institutional money, it's very easy to make money, and also you have something called follow through. You have no follow through here in the GameStop to the upside. In fact, every bar that's happened in the last 1, 2, 3, 4, 5, 6 days is red. So that is not a representation of buying power, money coming in, supporting the position, supporting the stock, and moving it higher. Okay. You see, this looks very different than the SPY. Now, I don't follow fundamentals. I look at technicals. That's why we're going to look at a bunch of charts today, and I'm going to look at gaps today, and I'm going to show you what I'm looking for money that comes in, whether, again, it's pushing it down or pushing it up. But in this case here, this was a once-off where you had traders that made money buying it. There were retail traders where you didn't have the institutional money on its side that flipped it up and squeezed the shorts to poof it up. But if you didn't get out right, if you had bought it at a lower price, you got screwed and you lost, actually, if you bought it too high, because you did not have institutional money buying the stock. You did not have institutional money supporting the stock. And actually right now at this point today, it looks like institutional money has come in and shorted the stock. Now, many platforms can't short this at all as an equity trade. And if you've even looked at any options trades in this, as far as calls or puts, it's been too expensive to trade. It's made absolutely no sense. It's actually more expensive than even Amazon, which is over $3,000 a share because of the volatility that's occurred in this. But I want to show you the gap if this was a normal chart here. If what had happened didn't happen with the Reddit traders, this actually gapped down. So from the other day over here, this was Monday, closed at 225, opened here in the morning at 140.76. So this actually gapped down. So I think what happened, and I said it on Monday, actually, it wasn't a mirror trade. I really thought that a gap was going to come soon in this, a gap to the downside. It happened the next day, which was really fast, really quick. But I thought to myself, institutions are going to come into this, short it, and push it down again, which happened really literally overnight. I mean, this is like, boom, look at that. It's pretty big and it's pretty fast, and it happened out of nowhere. And that's often what happens with gaps, because they saw an opportunity for the stock to drop, so they shorted it. Similar to what was going on back here. Remember when I took this price off? Again, it's really small if you squish it now, but this was way back here. Again, 2016, 2017, 2018, 2019, 2020, before this bizarre thing happened. So institutional money is in control of stocks and the market at all times. Even if you think it's not, it is. Even if you think it's not, it is. And while there were some people that actually bought in this on that Reddit chat that actually made money going long in this way before the pop-up that happened back on the 27th, okay? A lot of people lost, okay, because they got in the stock at a high price too late. And there are still people here that are long it, that swear up and down that it's going to go to 1,000. That is not going to happen. Why? Because you're not going to have institutional money coming in and buying it. And again, institutions make decisions based on fundamentals, based on looking at, the data, based on looking at earnings reports, things that I don't look at because I'm just reading the chart. I'm just reading the gap. I'm just reading the price action. In a nutshell, what I do is I predict where a stock will go by reading the price action in a gap. That is, in a nutshell, really what I do. Now, any questions here before I keep talking? The next one we're going to look at here is Google. Can everybody hear me? Hello? Am I talking to myself, or is anybody there? I'm loading up this Google. Okay. They're there. Okay, good. I don't know if I have the right thing up for the questions or not. But if there's questions, you can let me know later. Anyways, this is a beautiful what? Gap up. So I called 2,100 calls in Google. It's through the Striker Reddy this morning in the pre-market, okay? So let's go over this one. Now, what happened with this? I'll show you. So this Google had earnings. Probably if you follow the market, you saw this. This happened last night. It had an earnings report, so did Amazon. We'll talk about Amazon in a bit. But anyways, it just went pow. This was right at 4 o'clock. Now, as I've been discussing, what am I looking for? Institutional buying and institutional selling. Again, look at this. This was last night. 4 o'clock, boom. Low of the bar, this is after hours, was 1927.51. High of the bar was 20.80. Then it wiggled and jiggled and wiggled and jiggled. This is the post market. Then it opened this morning here early, 8:47 in the morning. It's roughly around 20.50, 20.60, and then it went. Now, I'm going to take this over here. It's running up. It's running up big time. This was a bullish gap up. What is happening here? Google's getting bought. Institutional money is buying Google. Forget about the fact that this cost $2,100 a share. Forget it. Forget about that completely. Okay. Again, I called option calls in this. Well, I'll explain what an option is in a minute, but this is getting bought by institutional money. So when you trade on the side of institutional money, you can make money as a trader. You're never going to move the stock by yourself. What happened with GME was a once-off. People think it's going to happen all the time. It's not. It's a once-off. And now that people know that that Reddit group is out there and they're attacking certain stocks, funds aren't going to even take positions where they see they're attacking them. So that was a once-off. And as I said, many traders lost to the GME or are going to lose in it to continue to hold positions in it because it is not going to go probably even anywhere near back to the highs, let alone $1,000, because institutions aren't buying it. Now, consequently, look at Google. Institutions are buying this. The fact that it's up where it is doesn't even matter. Like you said, well, how can this do this? Well, because it's getting bought. Okay, the stock closed yesterday at 1927.51. And again, I don't worry about fundamentals. I read the price, I rate the gap, I rate it in the pre-market. You could have looked at this last night. Last night I knew it was higher, but I didn't know where it would open this morning. Anyways, then today it opened here, 20.73. That is big, people. That is huge. $140 up, and it's still going. And many traders think this is going to fill the gap. They're short this, but that's the incorrect position to be in. Why? Because it's getting bought with institutional money. I always go in the direction of the gap, always, but I don't always go long every bullish gap, and I don't always short every bearish gap. Now, let me show you an example. Mark was asking of the opposite that I would not do. Oh, this is a nice trade here. This thing here. Oh, no, you know what? I'm going to go to AMC. I'm going to go to AMC because that was the other one that everybody and their brother was talking about. Well, actually, let's just look at this if this comes up. My computer's so slow here today. So Mark's question was, do I always go in the direction of the gap? Yes, but I don't short every bearish gap, and I don't go long every bullish gap. I qualify them. I pick them in the morning in the pre-market. I have a rating system, and that's how I determine it. That's how I figure it out. I do it all in the morning. I do all my homework in the morning, the whole shebang. And if it sets up the way that I want to see it, and it rates per my 26-point system, then I take it in the direction of the gap. If it doesn't rate per my system, then I do not trade it at all. I do not trade it at all. I don't touch it, because you have many gap downs that push back and rally, and you have many gap ups that fall and collapse. Okay. Gosh, these charts are so slow. Maybe it's just my computer. Too much crap on my computer. I have to delete stuff. This is just way slow. While this is doing this, oh, here we got it. Okay, now this occurred. What was it? It was a gap up. So this closed here, 496, boom, open in the morning, 2034. So this actually was a gap up. Now forget about the fact that the Reddit people bought it. Pretend that didn't even happen. Pretend it was news or earnings or something that actually would have stuck. The fact is, I would not have gone long this. Why? It wasn't a good bullish gap to me. It wasn't an institutional buying that was coming into it. You have sometimes things that gap up and sell off. You have things that gap down and then they reverse. Tesla earnings was just the other week. This is a good example. Tesla, everybody loves Tesla. Everyone loves it. It had a gap down on the earnings. It had a gap down. It fell. I didn't short Tesla. Not in my life did I short Tesla. I didn't go long it because it was a gap down. There was no play. We did no options in Tesla, which is all I would have done. It's too expensive in my mind to day trade, even on margin, but we didn't do any options in it. And I love doing options in this stock. They can be a little bit pricey, no more such than Google or Amazon, but they still at the end of the day can pay you because they can move a lot. You could pay $25 for one contract and it could run up to be worth like $125, but there wasn't any play in this. Why? Because the stock had earnings, then a gap down. It didn't rate per my system that selling would come into it, and actually the gap got bought. So that's why many people, when they're looking at something, they want to do a gap fill. They want to fill the gap to the downside. They want to fill the gap to the upside. That's a silly way to look at something. It doesn't mean that sometimes it doesn't work. It means that every once in a while, anything can work, just like that GME. Once in a blue moon, a bunch of retail traders can come in and push through a fund. That is once in a blue moon. That is a once off. That is not something that you could consistently rely on to make money. When you're looking to trade, you have to have a specific system in order to do it over and over and over again that you can rely on to make money. You can't have something that's just a crapshoot. And I think the biggest lesson from the last week, if anyone again has been following what's been going on with GameStop, is that many people do take positions in stocks and they risk money and they basically look at it like gambling. And for me, you know, I've been doing this since 2008. I've been trading since 2008. It took me about 3 years to figure out my system. I've been teaching people since about 2012. But the reality is you've got to take trading seriously. And I don't care if you're doing this part-time or full-time, and I don't care if you're risking $500 a trade or $5,000 a trade. You have to take it seriously or you will not make money in the long haul. Trading is not a get-rich-quick venture. You're not going to buy GME in a Reddit room and then make $1 million. Why some people did it, in my mind, many of those people that did that had it pre-planned and basically pumped up the stock themselves by taking the positions weeks and weeks and weeks ago. By the time it was out there and everybody saw it, most people bought it by $200, $300, over $300 a share. And Dave Portnoy, who's been on Fox a lot, I appear on television on Fox News and CBS and other channels. He's been on a lot talking about what he's been doing to help restaurants in New York. He trades. He admitted yesterday he sold out of some of these positions that he jumped on the bandwagon with the Reddits, and he lost 700 grand. Now, Dave Portnoy is a millionaire, can afford to lose $700,000, although I'm sure that was a hit for him too. At the end of the day, anyone that trades, whether you have a lot of money or whether you have a little bit of money, you must know what you're doing in order to profit. This is just reality. And I don't know why people don't understand that. I teach a class once a month. People pay me for my information to learn it, but they're also paying me to grab onto the skill set by getting the information that I'm telling them, such so that I'm telling you about Google, for example, and we're going to talk about Amazon in a minute. They're paying me for my expertise. Trading is a skill. It's a skill acquired through experience and education, and it's something that you have to learn in order to do it. Many people just, I think of trading as a gambling type of thing or get rich quick, and that's just not what it is. If you have a small account, you have to build it over time. You're not going to take $500, make 100 grand a month. That's simply not realistic. And if you believe that, you're in crazy town. You've got to come down to reality. Can you make 100 grand starting with a small account? Yes, over months and weeks and maybe years of time by building it up. Okay. Now let's go over this guy here. This was the earnings. Okay. So it closed here, boom, gap down here. So this was the 27th, gap down here, the 28th. This was last week. So anyways, this did this, and then what happened? It rallied. I did not short this. If I had, I would have lost. I didn't go long it. If I had, I don't think it would have made any money either. Because again, if I had traded this, I would have done it as an option, and I want to just show you here, it didn't have any follow through. Typically, I'm doing weekly options. So like, for example, if I had bought calls in Tesla, I would have done an out till Friday. You see it basically was in a range. This gap down, rallied up, open lower, dropped, closed, gapped up, rallied up. This pretty much went nowhere. And actually, if you look at this here now, it's pretty much going nowhere. Because look at this and look at the market. That's Tesla. Market's near the highs. So Tesla was just like, unfortunately, like I said earlier, it's a fun stock to trade options in. We've done it a million times, but this really had no play on the earnings. So you cannot short every gap down, and you can't go long every gap up. I qualify them based on a rating system. I'm very, very picky. I may do one thing a day or two. One thing a day or two, okay? Now let's go to, actually, let's check out where this is going now. This looks good. Let's go to Amazon. And any questions here while I'm talking? And if you're interested in more information, go to my website. It's www.thestockswoosh.com. If you want a trial of the trading room, you can email me at melissa@thestockswoosh.com. I'll give you the trial of the trading room this week for Thursday and Friday. eBay's tonight. We can look at that in a minute. But the most important thing, I think, when you trade is to have a consistent strategy. And the most important thing for me, and something I realized a long time ago, is that I have to go with institutional money, because they control stocks, they control the market. Even if you think they're not there, they are. And I think that the GME is just such an unbelievable example of that, because people swore up and down that fund that lost money, which they did lose money. Okay, I don't know if they got out of all the position or not. That was the fund Melvin Capital. People swore up and down they had killed that fund, and the stock was going to push all the way up to 1,000. That's not going to happen. And at any point in time, other funds could have come in and shorted the stock and supported actually that Melvin Capital's position. Now, I don't know if that's what happened the other day, but I think that funds did come in and short it. Whether Melvin Capital got out of it before that or not, I don't know. It was a poorly managed position in my mind, how they managed it, letting it run over the high. But as far as, you know, maybe other funds wanted to take out a competitor, I don't know. But at any point, several funds could have come in and slapped back on those traders. And that is what happened on Tuesday morning. Stock gap down. And there's still people that are long that stock that think it's higher, and it's just not going to happen. Now let's look at Amazon. This had earnings too. Everyone see it? Now this, okay, I'm missing a couple questions here. Let me just say. I detect it based on the gap. That's what I'm talking about, Terry. I go through 26 points in the morning when I see the pre-market, or you can do it at night with the post-market. Actually, you know what? Let's look at eBay, because that's out tonight. And again, this has not gapped yet. It is going to have earnings tonight, so it's going to gap. It's going to gap up, or it's going to gap down. It's going to move, that I can tell you. It's 26 points that I look at. That's what I teach in my class. My class is February 13th and 14th. Not this weekend, but Valentine's Day weekend. If you want to sign up, my class is $7,000 for 2 days. You learn everything I know about the entries and the rating system and the structure of the system. But anyways, getting back to this, it's something that I go through as a process in the morning. It doesn't take me 30 seconds. I look at it each day, and I go through all of the points on the daily. It's not just based on red bars or green bars. It's not just based on volume. And actually, I really don't do much with volume, except to say that I really don't use volume for anything other than I won't trade stocks that don't have any volume. So for like example, the AMC, I really, like low float stocks, I'm really not trading them. Why? They can't move that much. They don't move that much. They don't have enough volume. So all the stuff that's kind of getting slapped around, like EXPR, the AMC and stuff that the Reddit traders are doing, I'm not in those. Like, I really don't trade those. We trade stocks that you can just get your head around. Not only would you learn the system from me, but like you can get excited about them. Oh, eBay. I love to buy stuff on eBay. Or you say Apple, I love it on my iPhone. Or you say Amazon, I love ordering food from them. Or Prime, whatever. Like, it's things that you can say you love or you hate. Again, that you know, that you can talk about. Like, I'm looking at the price action, but I find that people really get emotionally involved when they're in a position where they really get behind it. And again, I call it conviction. It's conviction. Like Google running up today, for example, you have to have conviction that this stock is higher. Okay, let's look at that. Let's look at the eBay. Where is this right now? This looks like it's barely moving today, which is really funny. Probably because of the fact that this has earnings tonight. Look at this. This is like a snail here today. So anyways, this is just sitting its butt here. This is the 8-pair moving average on the black line. Okay, so it's just, this is hardly moving today. My only explanation for this, with the market breaking out that it's barely moving, is it's kind of waiting to see what happens tonight. Now, again, here's the chart. I'm going to squish it. This is eBay. Running up, running up, running up. eBay isn't an uptrend. What's going to happen? I don't know. But again, this is green today along with the market. Could eBay gap up? Yes. Will I go long it? It depends on the price that it gaps up. I have to wait to see, then rate it. And what happens with these, like the Google and the Amazon, it may do something tonight, and then it may look completely different tomorrow. So I tend to wait to the morning to rate and go through all my system and my process. But you know, you can look at them at night. Like if you're in California, people that trade with me in California, They don't want to get up at 6 a.m. They really just come into the room right at 9:30 at the open. You can wait until the morning to rate this. Now this could gap down. I will tell you right now, this is probably going to have play. It's probably going to have a playthrough. Like I feel very confident I'm probably going to be trading this tomorrow, but I'm not in it right now. I don't take it beforehand. I don't predict where it's going to gap. I don't know. I don't have any insider information. I don't know what's happening in this earnings report. I don't know what they're going to do. I'm waiting to see the gap. Then I see it. Then I rate it based on the daily chart. And I say, are institutions going to come in and buy this, or are they going to dump it? Are they going to dump it? Like you see here with this Google, it's getting bought. It didn't even matter how big it was up. It was up huge, and it still got bought. Okay, it still got bought anyways. Why? People think this is higher. They want to be in it. They're long. Okay. Trying to think. Oh, IBM. This was the one that we did the other day that was really good. We shorted this. Now, what I was saying earlier, I really like to short more than I like to go long. Why? Longs take a long time to go. Just for the reason that I told you earlier. There's no panic in a long. Okay. Now, in a short or a gap down that rates good that we want to short, again, you could have done a put in IBM or shorted the day trade. We did both. But in something that's falling, that falls, poof, like this did here. This was earnings too. Closed the night before 131.65, boom. Open here in the morning. This was January 22nd. This was a great trade. It opened here at 120.70. So I rated this. I said, this is going to get dumped. It's going to sell off. People are going to short this and sell it. It's going to fall. We shorted this as a day trade. We did a put in it. It worked. It's just one day, one trade. You're in, you're out. That's it. And whether you do an option in it or whether you do an equity trade in it really is up to you. I like to do both. But the thing is, with the price point here around 120, you might have wanted to do a put instead of a day trade. Now, I like to do day trades because I feel like I can maneuver myself more. But for the put, sometimes when something's at a certain price point over $100, people like to buy puts. It's cheaper and you don't need margin. For those of you that don't know anything about options, I have an options newsletter as well where I just call the trades. You can sign up for it. You won't learn the system. You just do the trades. But for this, if you have a margin account, you say, Melissa, this is super expensive. I need millions of dollars to do it. No, you wouldn't. If you have a stock and it costs $100 a share, if you have a day trading account, an equity account, a margin account, you can get margin from the broker. How much you get depends on what type of broker you're at. If you're at a retail broker like Ameritrade, you get 4-to-1 margin. If you're at a proprietary day trading broker, you might get 10-to-1 margin. So for example, if you have $10,000 in a prop account on 10-to-1 margin, you have $100,000 in buying power. So at a stock out of $100 a share like this, and again, I'm just roughing it out here. Say it was at $100, it was like around 120. You could have taken 1,000 shares at $100 stock price with 100,000 in buying power, 10 grand cash. So you don't need 100 grand cash to have taken 1,000 shares of this or something else. Does everyone understand? I find that people don't always understand margin, but it's something that's very important to understand. It's important to understand if you're trading on margin. And quite frankly, it is also important to understand with what happened with the Gamestop. A lot of people were taking positions in Gamestop, and some were taking positions that they were taking on margin and didn't understand what they were doing. And that's part of the reason why some people were losing there. And by the way, that's also the reason that Robinhood made some of the restrictions, because what they should have done and what they didn't do, and I think hurt their brand, was they should have said, we're going to make all positions in GameStop or whatever stocks, AMC, that you have to have cash, no margin. And I think that would have alleviated some of the problems that the broker had, Robinhood. But at the end of the day, margin is something that all active day traders use, even big professional traders do. Otherwise, you wouldn't have the volume that you have in the market. Only people that are super rich will be allowed to trade, are able to trade, and that's just not the case. If you want to learn more about margin, you can email me or call me after the fact. If you don't even have enough money to open up an account to have a margin account, you can trade options. You can open up an options account with as little as $2,000, and you can just buy one contract, which is the equivalent of 100 shares of something. And if it costs $1, you pay $1. If it costs $2, you pay $2, okay, which would be $200, for example. Now that's a position you could take in an account with $2,000, okay? Anyways, this was a nice short To the downside, actually, this still looks lower too. We're not in anything in the IBM, but you can see here how this had the beautiful follow through. This is pushing back now, though, here with the market. Any questions here at all? I'm going to talk about Amazon here before I let everybody go. The website's www.thestockswoosh.com. Here, I don't know if I can write in this. Here, I think Sherry put it in. It's www.thestockswoosh.com. But if you want to try the trading room Thursday, Friday, you can email me at melissa@thestockswoosh.com. 2 days in the room will give you a feel for what you do. But really, tomorrow is eBay. I'm going to be all over that. I don't know if I'm going long or short it. I really don't know. Unless it does something completely ridiculous, we're probably doing eBay. So, you know, you can come in the room. I call the trades live in the room. I call the entry. I call the stop. And that's the other thing I wanted to say too, actually, about the Gamestop situation. The fund that got hurt in this, that lost money, Melvin Capital, mismanaged their position in this. Now, again, whether they're all out of it, they're not, how much they lost, I don't know. We'll never know those details. It'll never come out. But the reality is that they mismanaged the position, because if they were short this, stock was in a downtrend. I saw what they were doing. The reality is when the stock lifted over the high, which was January 22nd, they should have killed the position. And if they had, they would have lost a lot less than they would have here, the 25th or the 26th, you know, or even this terrible day for shorts, which was the 27th. So, you know, it doesn't, people always say, oh, I need a lot of money to trade. I don't have enough money to trade. I've got to save up. It's this, that, it's the other thing. No, people that have a lot of money actually can make mistakes too. And hedge funds can make mistakes. Wealthy people can make mistakes. You've got to not only know what you're doing as far as a strategy, you also have to have proper money management. One bad trade can wipe you out, even if you're a hedge fund. And certainly if you're one individual trader and you have a small account. So, you know, you have to have good money management. For me, I use stops. So my money management is I just put a stop in. When I'm doing a day trade, like IBM was shorted, it worked. If IBM would have flipped, failed, rallied, I would have lost on that day. But I didn't lose, but I would have, and I would have just lost the amount that I risked. That's it. I put in a stop. It's a hard order stop. I call it a hard stop. It's a limit order stop. And when I do an option, I can't lose more than I risk. So if an option costs, like I said, I'm just making up a number. If an option costs $1 and I want to buy, you know, 50 contracts, what will that cost me? $5,000. I can't lose more than $5,000. It doesn't matter what it does. And for me, then the total position is my stop. I don't kill it in the middle of it if it's not working or if it's down. I let it ride out. I give it to the expiration date. I just let it ride. And I'm doing the weeklies. But, you know, you have to have money management to trade. And more importantly, you have to have a strategy. There was no strategy here for the Reddit traders that were buying this. That's why many people lost. And as far as the hedge fund, there was no money management because they should have gotten out of the short position when the stock lifted and went over the high. They may not have known why that happened before all the news became public of the Reddit traders and the positions long in it, but the fact was it doesn't matter. Once this stock lifted over the high, they should have killed it. And that is going to probably happen here too. I know I came in late and I was having trouble with the computer, but I just want to say one thing, I'll let everybody go. That's going to happen here. It's probably going to happen here more so in the Qs because day traders shorted this today. They shorted it, it fell, we set the low of the day into 10 o'clock. There's a double, triple top here. People shorted this. They think this is a good entry short in the market. It's ridiculous. The market's higher. It's going to make a new high in the next 24 to 48 hours. The market's higher. And that's all I have to say. Any questions? Okay, thank you, Sherry. Yeah.
All right, do you guys have any questions for Melissa?
Email me at thestockswoosh.com if you want a trial. The Golden Gap class is where I teach my strategy. The class for February is February 13th and 14th. Email me if you want to sign up. You want to go to the website, it's www.thestockswoosh.com. The class is $69.99, that's $7 grand. Everybody pays the same. You must take the class to join the trading room. And if you just want to trade options, You just sign up for the options newsletter. It's a newsletter. The trades get emailed to you. Again, we did QQQ calls, we did SPY calls, we did Google calls, we even did Amazon calls. So we'll see where this puppy's going to go too.
All
Thank you
right. Well,
so
listen.
much for having me. Let me see if there's anyone.
Can you hear me, Melissa? I don't think she can hear us still. Okay. Thank you. All right, everybody, can you hear me? Type yes if you can hear me. And I will take back. All right. Next up, we are going to see, first of all, if you have to leave early, you can still hear the rest of this webinar. It's at tradersexclusive.com/archived_webinars/. You can't see the underscore where that link is underlined in my slide, but it is going to be posted there. You'll also get a follow-up email from GoToWebinar where you'll be able to see it while it's here, and then within 24 hours or so, we move it over to our website. I want to introduce to you now Simon Jousef. He's the head trader at the Trader Institute. He's going to talk to us about your psychology versus my accurate trade calls. Woohoo! Simon is, like I said, the head trader and trading educator for the Trader Institute. He provides day trading signals, market analysis, and education through his Telegram channel and live training on GoToMeeting. He held his first public class in 2004, and by 2010 switched to online conferencing due to global demand. He focuses his education and training on the core of what moves the markets. We all know it's about buying and selling, so volume and volume pressure is key to understanding the markets. And with this dynamic math-based indicators and system, you can see the moves ahead of time. So welcome to the webinar, Simon. I'm going to make you presenter. I see that your microphone is on, and take it away.
Sherry, thank you so much for the kind introduction. How's audio? How's video?
I can see Trader Institute, your psychology versus my accurate trade calls. Can everybody hear? Everybody type yes.
Excellent. So questions, I can't see the questions at this time. I don't know why.
I'll assign them over to you. It has to do with whether you're an organizer or presenter. And what I'll do is when I see them, I'll send them right over to you. You can choose to answer them right away, or you can choose to hold them until the end.
The end, please, till the end. Now, welcome everybody. Thank you for being with me. It's been a very busy day. It's been a very busy couple of days with trading. I usually don't prepare for webinars much because I've been doing them for a long time, and basically I talk about what we've done, what we do, and what we offer. The title is Your Psychology versus My Accurate Trade Calls, and you see here there's a box with my picture on it. Says 1,000 ticks every month, profitable and consistent, the TTI way. Now when I say 1,000 ticks a month, really it's not an exaggeration. Therefore we offer free and conditional trials for people to see. We don't sell anything unless you come and try us for free. Okay, you'll get to see, you'll get to take the calls, you'll get to monitor, you get to talk to the members, etc. Okay, and this title came to me recently because really we've been averaging easily 1,000 ticks a month, easily, and I noticed some, especially the newer members, have missed some calls, have not taken some of my calls, although they were in front of their computers ready to go. So there was like a mental or psychological or something holding them back. So I inquired, then I came up with this idea. Let me present it to the members, see if I can get through to them and help them understand and take the calls. A lot of it comes from self. I mean, it's within yourself, according to what you've seen before, according to what you've traded before, the losses, the bad experiences, etc. Sometimes it comes from different reasons. Maybe you're sleeping. Maybe you have a different time zone while I'm calling a trade call. So we can talk about it today. I started back in early 2000s. My first public seminar was in 2004. In 2005, I started looking into this, something like this, the bid and ask ladder. I decided to crack the code, as they say, and I really spent 6 months trying to develop myself and trying to understand the numbers. Having a physics degree, it helped me understand the numbers, and I came up with things that, you know, I was a pioneer, I think, with reading this. I developed something called the price magnet indicator. I came up with something called end of buying, end of selling, unfinished business, openings, cappings, traps, point of controls, etc. And then we moved on. Like I tried to make it easier, simpler, more effective. You know, the market is dynamic. Nothing stays the same. So if you look at the volume will guide you. Okay. This is a picture from 2006. I did, this is local in Toronto. This is 2004, Toronto, 2005, 2004, Toronto, Ontario.
Okay, Simon, if you're talking, we cannot hear you. Oh, did you come back in? You need to enter an audio pin 80595 pound.
Jerry, you can hear me?
I can hear you now, yes. Okay.
Something happened to my computer. Maybe somebody, I don't know what happened. It got frozen completely. I logged into my side computer.
Okay, well, your slideshow is showing Denver, Colorado.
Okay, just ignore it. Give me the access again. I'll use this computer. Something happened, which was never happens before. I'm sorry.
It's kind of a volatile environment right now, so you can share your screen now.
Okay, let me just do this. I don't have the presentation, so I will just go as, because this is a completely different computer. Okay. Oh.
Okay, I see your screen now.
Okay, you see the screen.
It's the Sierra chart 2207.
You got it. And I actually, I'm sorry, folks. Something happened. My other computer froze. I cannot even restart it. I don't know why. I feel like I got hit with a virus.
Uh-oh.
I don't understand why, which is weird. But again, I have this. Now, I've been doing this. I don't have my presentation here, so forgive me. Let me see if I have. I don't have my presentation, unfortunately. But we promise members 1,000 ticks a month, which is really not a big deal, as I mentioned earlier. We try and make sure that we fulfill our promise. And let me show you something. Let me just go prepare. And again, I'm sorry, folks. This is not something that I usually encounter. Let me introduce you to the website. This is the website, and again, I emphasize on 1,000 ticks a month. That being said, for the month of January wasn't hard really. There was a period of time where the markets were slow. But if you look at the one of the services I offer is my Telegram. The Telegram is 24 hours, and you can join the indices channel, the elite chat, the metals, which is gold, silver, oil, nat gas, currencies, and Bitcoin. I don't do a lot of Bitcoins, but sometimes. So as it stands now, for this month of February, first day of February, I made 2 trade calls. Okay, one of them on NASDAQ. This is NAS 100. This is not the NASDAQ. This is NASDAQ 100. This is the NASDAQ. Okay, so this is NAS 100, which is the CFD market, but this is the NASDAQ. I made a trade call on the NASDAQ. Unfortunately, I don't have my other computer, so everything was set there. So forgive me, I'll be doing something without the presentation. I wasn't prepared for my computer to be shut down or attacked. I don't know what happened. So NASDAQ, first day of February, folks, I made a trade call from the bottom, okay, and we exited here for almost 1,000 ticks, just one trade. With that, I also did the SPX, which is the ES, the futures. Between these 2 trade calls, between just these 2 trade calls, folks, we netted 1,270 ticks. So promising 1,000 ticks that I will give you in trade calls is not a very big deal. I'll tell you why. This is Colorado, Denver, 2012. What happened? Who's running my? Are you running my webinar again? The audio? I'm sorry. I heard myself. I heard myself again.
Are you asking me?
Yeah, because I heard
No.
myself again. Something is
That's
happening.
awesome. That's awesome. I'm not replaying anything. I have myself muted.
Okay. So let's talk about something that makes me different, or makes us different than other trade rooms, which is using numbers that market makers use, or hidden volume in the market. And let's talk about anticipation and then confirmation of the market. Okay, it's very important to confirm after you anticipate a market's move. What sets us different is this: how many of us here use basic trading or even advanced trading indicators? Almost everybody. Let me give you an example of why it's important to look at volume, and why is it important to look at what the market makers are doing. I don't trade what I feel. I don't trade what I hope. I trade what I see. Okay, let's assume that you're looking for a long and the market is coming down. Let's say this is gold, and this is an example because we are currently long on gold. If you look at gold, okay, this is the gold. We are actually long from the bottom right here. We are a little bit in a profit. We've been taking it multiple times with profit, but I'm looking at a long swing all the way to 1900 level. Okay, so let's go back to my diagram. You're looking for a long, and all of a sudden you decided to go long because you have a level here. Let's say this is a level, Fibonacci level, a fib level. Okay, fib level, and you really like this level. The market comes down to it, you take the trade, you have 30 ticks random stop, and then it takes you out. And then the next level you say, okay, this is I like this one. It's 68% Fibonacci level. It's even better than the 50%. Comes here, you take the trade, it stops you out, and then it goes in your favor. You say, no, it's gonna, it poked it, but it's gonna honor it. So you take the trade here long again, it comes back down, takes you out. What to do? You're confused. You were told 68% is the key, whatever. There are a lot of factors that if you don't see inside the market's pressure, you don't see inside the market's volume. Therefore, you really don't, you're just guessing. You are just trading on an anticipation. You're trading on this level, anticipating the market to go up. You have to confirm and they have to execute. Therefore, my strategy called anticipate, confirm, execute, ace every trade. Let's go back to the chart to explain one thing very important. Let's go to, what do you want to see? NASDAQ. Let's go Dow, even oil, crude, okay? Do you see these levels on crude? These levels on crude, this is the volume profile that you see right in front of you, okay? This is volume profile. Let me remove these lines so you know these are my specific lines. This is volume profile. So this volume profile that we designed, it's an indicator that you can receive. It will show you in details what the market wants to do. And this market profile, you see reduce it, you can enlarge it, you can sharpen the edges, and you can play with it. Okay, this very dynamic. So this volume profile indicator, you can put it on a 15-minute chart, you can put it on a UK oil on a weekly chart, you can put it on a tick chart, up to you. Bottom line is that this volume profile will show you a few things. Will show you continuation zones and rejection zones. C, continuation, rejection is R. Okay, let's go back. And now the same method, the same trade that we talked about, I'll explain it in a way that you probably will understand it better. Understand how we're looking at it. Looking at the gold, I see a continuation zone all the way here. This continuation zone could be a number of continuation zones attached. Below the continuation zone, I have another continuation zone that is different, but yet it's continuation. In between, there's a rejection zone. Understand this, there's a rejection zone right here, okay? So this is rejection, this is continuation, this is continuation. When the market came to my 50% retracement that I wanted to go long with, if I knew this, if I knew there's a continuation zone, okay, continuation zone from here to here, would I have taken this trade? No. 68%, let's say it's here. Would I have taken the trade? Still no, because this is the rejection, okay? So if you know this already, this is only for anticipation. This is not, we're not even trading. Knowing this, knowing how to use volume profile ahead of time, it will prevent you from getting into a trade that you don't know what's next. Do you know your stop? Do you know, folks, that we have something called smart stops? It's amazing how people see me take a trade after the market drops so fast into a level, intimidating everybody into a short. They see me just sitting back and relax and say, oh no, hold on, this is just intimidation. The market is going to go up because there's a next thing that you need to see, which I'll explain. So the market comes here, okay, and this is my rejection zone. Here I would say, I'll say something like this, and I'll give you an example on gold today. Here, okay, remember, I would say something like this: gold long at 1833 area. So it could be 1833.2, 1833.4. It depends on how fast or what price you clicked on. That's not something I can control. There would be always a difference of ticks. Now, since I am looking for big swings, I'm looking for 200, 300, 400, 500 ticks. It doesn't matter if you are 1 or 2 ticks different than anybody else. And I clearly at 10, look at this, the price, the timestamp is here, and this is today, 10:56. I said long at 1833 area, stop at 29, which is 1829. Gold target 1 is 35, which I'm looking at 20 ticks. First target 20 ticks. Okay, now I call trades with 3 contracts. My T1, target 1, is for 2 contracts, for 2. So if I'm taking 20 ticks on 2 contracts, 20 times 2 equals 40. So you can do micro, you can do full contracts, as long as you're happy with your account size and executing my calls. That's part of what I also teach. And we're gonna go back about things that prevent you from doing all that. Okay. Now I also see I care about my members my members trading. I said if you grabbed the gold at high 33s, okay, take your first target at 35.5. See, I said gold T1 at 1835.5 if you had an entry at high 33s. So if I'm entering at a price and your price is 2-3 ticks higher than me, then you can go to, and both cases I said T1 is out. So now T1 is out, we got our 40 ticks. Stop loss remains at about 40 ticks or 30. And then I gave him another note. I said, if the market, make sure that your stop loss on gold, okay, here, take T1, whatever, make your stop loss, make sure your stop loss on gold is less than 40 ticks to make sure that even if market goes against you, you are profitable. So what did make me call that trade on gold, for example? First of all, I have the rejection. Second of all, I know my stop loss. Why? There's another continuation zone. So there's a rejection here and there's a continuation zone. So if the market, if the gold comes back poking into this continuation zone, what do you think will happen? It'll continue. So does it make sense to have a stop loss here? Absolutely not, because if my stop loss is here and if it's taken, this one will be taken too, hence the continuation zone below it. Mind you, there's another reason why I did call the trade. The main reason for me to call the trade, folks, is confirmation. Anticipate, confirm, execute. Confirmation comes in knowing what the market makers are doing. Folks, this is something very important. Again, there's a reason why I also offer free trials. I'm not gonna sell you anything unless you try us out. You email us, you call us, you join us, free trial, you see for yourself, and if you are not wowed 100%, you're not convinced, nobody will ask you for anything, okay? We don't do hard sells, we don't do anything. So let me show you the confirmation. You see this magenta line at the bottom? This is a wall. It's been sitting there for now a week. For a week, we've been long, especially now. It was lower. Now it came back here. So now this is the wall. Therefore, my stop loss is still at 29 below it. Because if 29 breaks, there's a continuation zone that's going to bring it down to almost 15. See? You understand? So there's anticipate, confirm, execute. Now for you to know more about us, there is a few things, please. First of all, what we offer is not only a trading calls. For the month of February, I'm already up almost to 1,500 ticks, even with a couple of small trades I did. They were not small, folks. The trade that I called today, this morning, I called 3 trades. All 3 of them gave me first target, and 2 of them are still running. One of them is on the Japanese yen, which is JPY, Okay, it's a long, but it gave me first target. Now we are waiting to go. It's very slow. It could be also on the yen, Japanese yen, US yen as well. It's a short. So it gave me first target, so my stop loss is secured. Even if it goes against me, I'm secured. The second one, as I told you, it was on gold. First target is out, taken. Okay, now we're waiting for the market to go higher. The most important trade call I did was on NASDAQ. NASDAQ has done 350 ticks from my trade call. But you know what it did? Initially, it gave me a first target, and we went up 100 ticks. I told everybody to move the stop. It's right here. And then it took the stop loss out. It was a very nice profit overall, but it did go after that 350 ticks. If you look at the indices, look at the times. I said 1027, NASDAQ support 13400 area. And I see, pay attention to this. NASDAQ stops at 13396. Now, if you don't understand why am I calling the stop loss first, you have to come and visit us. You have to understand my stop loss is the most important thing that I can present to you. I know my stop loss ahead of time. I said my stop loss is this, and then I said NQ stops now. See, after 1 minute, changed to 95. I did not call the trade yet. I called the support level. I called the stop loss. I have not called it yet because I usually say, if I call it, I give you possibilities. Okay, I didn't call it. 10:30, 2 minutes after, I said NASDAQ long at 408 or better, meaning 408 meaning 1334408 or better. Target 1 at 20, which means 12 points. You understand? 12 points first target. 12 points, that is times 4 ticks. Okay, that is a big target. And then I said NASDAQ take T1 now. We got to T1. Move the stop loss. So I give you details. And everybody was amazed because it was a very nice move. Unfortunately, and I said it's a textbook trade. I was anticipating it. I waited for confirmation and executed it. I have 140 traders with me here. 138 actually. 40 me and my assistant too. So, and then it came back down fast. It took the stop. Overall a profitable trade, but it did go for 320. Now it's even more. So there's a reason for this success, folks. Okay, there's a reason. There's an anticipate, confirm, execute, and we do it day in, day out. Look at the website. Something will strike you. I'm very straightforward. I don't have anything to hide. There's my CFTC case, which lasted for 4 years and it was closed last year. You can click on it, read about it, move on. Once you come to the room, once you come and visit us, you will see exactly what we offer. Okay, it was a civil case. I want you to understand that if you go to the website, I have a video, a YouTube channel. If you click on it, there's a lot of YouTube videos that I post. Some of them are very important. The what do you call it? This webinar I'm holding now, because my computer crashed, really crashed completely. I don't know why. So I'm doing it without my preparation. I lost all my preparations. I have a similar one here on my YouTube channel. Okay, I've done it a couple of weeks ago. Furthermore, if you go to the website, I want you to pay attention to one page, very important. Even if you don't join me for trials, even if you don't join us, go to the education. Click under About Us, Education. Go to this education page. Pay attention to one important a video that is not done by me. It's done by Dr. Kenneth Reed. Okay, 2014, he visited our room and he did a webinar for us right here. And I usually joke about it, but I'm serious. Unless you are getting married today, you need to watch this video. It's old, it's done by a psychologist, but it's very important. Please, it will teach you a lot about who you are and how you think about trading. The next ones I want you to watch this webinar. If you don't want to watch it, it's recorded right here. But there is another one that is, I think, for 50 minutes. It's our indicators and how they contribute to our success. It's important. And there's a few more that you need to watch, but this page is very important. I don't know, Sherry probably has a copy of a PDF. She can share it with everybody later. But that is one of the things that I want you to pay attention to, okay? Since I lost my presentation, okay, I don't know what to talk about now, but we've done so many things to improve our members trading. Now the idea behind this is your psychology versus my trade calls. There's often students, members, non-students, trial members. They will email me or they'll text me. I have an open channel with everybody. You see this? And I have also private chats. You can chat with me privately here, okay? And they will say, okay, there's the news came out today. The oil's inventory report was this. Why did you short the market? Folks, I don't care about the news. I care about what the market makers are telling me. If the market makers are telling me there is heavy volume and they showing me the map and telling me what they're doing, I don't bother with the news. Some people will join this, join me and join the class and they become full members. And after a few trade calls, I would follow up with them. How you doing? Did you take the Canadian dollar trade, or did you take the yen? Did you take the oil? They will say, no, we missed it because we only take the NASDAQ. We only do the NASDAQ and the ES. And that is something that we need to discuss too, because listen, I don't trade, and I'm not going to call a trade to entertain you. Folks, if I don't, again, 1 second. Okay, 1 second. Let me just erase this. If I don't confirm, if I don't anticipate my trade, if I don't confirm it, I am not going to call it. Therefore, I might stay 4 or 5 days without looking at the NASDAQ, the Russell, the Dow, because it's choppy. It's not reasonable. I'd be focusing on gold or silver or yen, the pound. So if for a week, if I don't give you a trade on the NASDAQ, automatically, folks, you're going to be bored. You're going to be taking trades that don't mean anything, and you're going to lose money. So one of the things that holding people is that they will say, okay, I don't like to trade the gold, or I don't like to trade. I'm giving you the signal. Okay, all you do is follow it. That's besides the full education that I'm offering, which I will cover shortly. Okay, so there's a lot of factors that contribute to this. Okay, a lot of factors that contribute to why some people cannot follow my calls. There are factors that you can't help, such as I have a member who is a lot of members in Australia, so their time zone is different. Sometimes I'll have a trade call, especially in the evening session and the Asian session, which is when the Asian open at 6 p.m. Eastern time. They would be sleeping, so they would miss it. That's fine. If I give you 1,000 to 2,000 to 3,000 ticks a month, you can capitalize on 50% of them, or even 25% of them. You're good. So that's why, folks, it's important to come and see the trials. Trials are available for you if you ask us. Let me go to one thing that you need to know. Once you join me as a member, okay, after the trial, of course, we have a members area, a full comprehensive members area for you that has all the education you want. First of all, there's the monthly room links. I'll give you the room links. The live room we have Tuesdays and Thursdays. It's designed basically for you to see me how I do my top-down analysis. How do I look at the lines of the levels? I give you an idea of what I look for. Okay, it's 2 hours. I might increase it maybe in a month or two, but it's 2 hours, twice a week, and students look forward to that. But the rest of the signals are done on Telegram. I have indices. I have the elite, which is the chat between the elites. I have a free channel that you can join immediately. It's on the website. It's a free channel. Anybody can join. From here, we can move you into the trial ones, which are whatever students are getting: metals, oil, currencies, bitcoins. Bitcoins, as I said earlier, I don't look at much. So, and then you get level one of comprehensive education, and then level 2. Let's examine level 3. Level 3 is the most important level that you can go through. Crash course on volume profile, advanced examples, and then you have level 4, level 5. Okay, indicators that we offer, folks. One of the indicators, if alone, will save you a lot of headache. If you know what the market makers are intending to do, believe me, you'll be happy, because the SAL indicator, which is Simon's attraction levels, will save you a lot of agony, because it will tell you what the market makers are looking for, what they're doing ahead of time. Okay, if you look at the NASDAQ, this is NASDAQ futures. Look, I see all the heavy levels, and I can see up to 50. Okay. Unfortunately, I lost a lot of time because my computer crashed, which I will have to deal with after the webinar. If you go to the website again, and if you go to the membership site, there is a price at the bottom. Don't pay attention to it, because we have a special offer. I want you to pay attention to this. We don't allow anybody to purchase any membership before they try us out. It's a free trial. And there's a special as well. Now, if you like it, amazing. If you don't like it, still, you can stay with us in the free channel, which is the Welcome to TTI. This is a free channel. So we will give you access to all the channels. We will give you access to the live room. We'll give you 2 weeks. Okay? But you have to let us know about yourself. You have to, we have to know if we're good for you and you're good for us. We have to qualify you and you have to qualify us. So we have to go through like a simple email to know if we are fit. If you're coming to us with $100 account and you want to trade with us, that obviously it wouldn't work. If you cannot afford a decent account at this time, maybe you can wait. Or if you don't know anything about trading, I'm not going to charge you money to teach you the basics. They're available for free, and I can guide you. Email me. I'll guide you where to go and learn for free until you become somebody who can use trading. So if you want to join us for a trial, just email sales. If you have trading questions, email me. General info, our general manager, JR, email him. Okay? And I have a few minutes left. If you folks have questions, I'm here.
We did have a couple come in.
Okay, I see one from Jason.
Jason, yes.
Yeah,
yes.
I am in the trials. Yes, I know. For the second time, it was a bit advanced when I joined 3 months ago, but I went through your free education page and I am loving how accurate your calls are. Just a couple of questions.
That's great.
Do you offer a payment plan? Well, that's not my department, but I believe Daryl does if you email him. I think he'll contact you because we know you're in the trial and you're enjoying it. What is the typical learning curve? It's up to you, really. I mean, this is a permanent membership, okay? And if I show you an email from one of my members who joined me 6 years ago out of Germany, he emailed me back today. He went and he did his things. He was busy with life. Now he's back. He asked me to give him the links to the Telegram and he joined again. So you take your time. However, if you are serious, you need at least 2 weeks to go over the materials because it's a lot of education. 2 weeks, and with questions, you will be good. Any more questions?
Folks, we have about 5 more minutes for Simon. So if you have questions, go ahead and feel free to type them in right now. I have pasted in a PDF, a link to a PDF, which gives you a lot of the information and the links that you need for the Trader Institute. I also included the email address, sales@thetraderinstitute.com. And I also went and got the contact page for you to be able to click on it right in your chat right here to be able to go there and get your free trial. So if you have any other questions, anybody have questions? I may have a little lag going on here. I don't know if
here's a note from
there
today.
you go.
He says this is a trial member. He says I took 3 calls, all winners. Thank you very much. So just to let you, he's a trial member. I'm not making this up. It's right here. And I was just following up with him because he was saying, I appreciate you respond to me quickly on Telegram. I told him, hey, listen, this is my livelihood. This is my life. This is all I do. I trade and I enjoy what I do until the market closes. So I am available all the time, guide you through, give you trade calls, give you education. And when there's nothing, there's nothing. Again, I don't trade what I feel. I only trade what I see, which works perfectly. So I'm here if you have any questions. If you don't, I'll go back to the education page, which I want you really to pay attention to, please. Go to the testimonials, read them. We have more coming. Go to the education page. It's very important. It's in the PDF that Sherry will give you. But there's a video also at the bottom, which is made 2 years after the first video of adult ADD by the same doctor. Okay, you can view it too. So hopefully you will understand the idea behind stability in our trading. They call me Mr. Patient, and if I don't see it, if I don't confirm it, I don't care about it. That being said, really, and they do call me because I'm very anal when it comes to my stops, to my entries, to accuracy. And when I look at different instruments, when I look at 15 different instruments, I'm comfortable because one of them at least will give me something. Can you please learn chart SPX? What profile? Oh, this is SPX. This
Okay,
is SPX.
so the question, guys, let me just jump in there, Simon. The question is, can you please explain the chart of the SPX, what the profile lines mean? Because nobody else can see that question but you and I.
Yeah, SPX is the ES, the E-mini S&P, but in the CFDs market. The profile is a comprehensive. That's a comprehensive question there. I don't know which lines do you mean, but these will give me these levels will give me the continuation, the rejection, the stops. Plus, I have also the look at the rejection that happened earlier. This line that you see here was created by the market makers. It's rejected the market. This is something that my SAL indicator, if you go to studies, Simon's attraction level, it appeared here. So this was the main rejection that happened. So it's a lot of things that I can give you with your question. How about this? Email me or come join the trials. for 2 weeks free. Nobody will bother you. If we qualify for the trial, just you'll join us, and you will learn a lot, because I look at CFDs, futures, and forex.
Fantastic.
Thank you so
All
much.
right, I did reply. Please do email for an in-depth reply. I've reposted the link to the PDF, and that PDF takes you guys to a page where you've got a bunch of links. You can get into the YouTube, you can get into the trial. You've got a lot of options on that PDF. And Simon, I just want to thank you so much for joining us and how gracefully you were able to pivot even though your computer froze. We appreciate that.
I can't even start my computers. I don't know why. It's completely smashed. I don't know. It could be a virus. I don't know.
That's not good.
It's not good. Thank you so much, everybody. Thanks, Sherry. Appreciate it.
All
Have a
right,
good day.
you have a great day. Take care. And we're going to bring in our next presenter. Last but not least is our good friend, Hugh Grossman. And he is the owner of DayTradeSPY. And he's the head trader. And his biggest passion is his family. And right after that is the options trading training business, which he fell into quite by accident when associates insisted on knowing what he was doing to earn a great income, despite downturns in the economy. Hugh turned his focus on teaching his amazing strategies that enable others to demystify options trading, turning losers into modest, consistent winners. Hugh has many years experience, but never forgets his roots. He's a compassionate trainer who understands your concerns, be it if you're a beginner or an expert trader, and he's really trusted to provide you with honest answers to your pressing questions. So I hope you guys really enjoy this. Hugh, take it away, and thanks for joining us.
Hello. Can you hear me okay, Sherry? Is this thing working here?
I can hear you perfectly.
Awesome. What do you mean last but not least? No, last and number one.
Well, that's what I meant. You're our last speaker for the day. We've had a great day. We've had some great speakers, and just because you're on the fourth time slot, it's not the least. Everybody should just listen right up and keep going with it.
Now, Sherry, does that mean I can go till 5, 6, 7 o'clock endlessly?
Well, you might be able to, but I'm not sure any of the others of us are going to stay.
I can't do that to you, Sherry. I can't do that to you. Honestly, I can't do that. I got to be honest with you. I don't like long webinars either. And I've been on some of them, as I'm sure you have, as I'm sure everybody has, where you just go on and they go on and on and on forever. But anyway, no.
I really think that what people have come to depend on with the Traders exclusive webinars is that it's a 45-minute, super educational, super informative, and we move on. You know that? I think that's, it never gets old. So, and everybody that comes on with us brings so much to the table. So we appreciate it. And with me saying that, I can see your slide, pivoting to prosperity, and I'm going to mute myself and let you take it away.
Sounds good. So, yes, my name is Hugh. Good to have you all here. Thank you very much for taking a little time here this afternoon. And DayTradeSPY.com is our website. I'm sure many of you have seen it already. And if not, please check it out. So, and it's always changing. So even if it's not, if you've been there and if you come back a week from now, it could be different. So, but what we do is we trade SPY. And this session is going to be about pivoting to prosperity. It's something that I think is very important, especially these days. And first of all, I do want to give special thanks to Sherry at Traders Exclusive for putting this on and being patient with us too. Sherry, I guess you have to wait the whole time while everybody's gone before you close the doors for the day. But I do promise to be out of here by 4 o'clock at the latest. So anyway, thank you all, and thank you very much again, Sherry. So what this session is going to cover, folks, and I know there are a lot of new people on who've never traded options before. And I know there's some people that have been in that GMC, is it GME, Gamestop? This apparently is attracting a lot of attention these days. So I know we get some people from there and asking, what are options anyway? Well, what is this all about? Okay, obviously there's something going on here. So we're going to cover why SPY options are your best choice for today, SPY options, and how to safely trade and profit in volatile times, which is what I believe we are under right now. You don't even know it. Okay, and I've got a simple strategy you can use right now. In fact, it's so incredibly simple. You're going to say, what, that's it? And I'm going to say, that's it. And I'm going to show you how we make money on this. I'm also going to show you the next steps in becoming an expert trader. So for those of you who think that you're going to be on one little seminar, webinar, or you're going to get an ebook or a video, you're going to suddenly become an expert trader, doesn't happen, doesn't work that way. It truly doesn't work that way, and I'll tell you all about that later. So that's what we're going to cover. So number one, let's start here. Why SPY options? Why SPY options? I think it's the best choice for today, and here's why. We day trade options on SPY. I guess should give you a little background about where I'm coming from with all this and what all this, where all of this stems. And that is that I used to be an internal auditor for a Fortune 500 company, and I used to hand off a lot of my salaried employment income to my financial guru to invest in my future. And by the time I realized he had lost half of it, I was just livid. And the irony is I should have been on top of it, right? Being an auditor, you think you'd be on top of it. But what's that saying? The dentist's kids got the worst teeth or something like that. So I used to get these statements from time to time, but I was, so busy at work, and the last thing I wanted to do was look at numbers when I came home. So I just take these statements and pile them up, and I figured, well, my good friend Mike is taking care of it, and Mike's going to take care of me, and Mike's going to, I'm in good hands with Mike, right? One day I thought I'd better open this up and see what a nice surprise I'm going to have for my retirement. And when I did, believe me, I was so distraught when, wait a second here, about half of it is, the capital is left. That's it. The other half is gone. So I promptly called him and said, okay, it's my fault. I should have been on top of it. I get it. What the hell's going on? And then he realized he's going to lose my account, and he's trying desperately to keep me. He's had a lot of money in there. But I essentially told him, look, cut me a check for whatever you have left. Obviously, I have to learn how to figure out how to do this myself, and I did. I did take a lot of different courses. Most of them didn't really have much value for me, and a lot of these courses I found the thrust of the courses was to get you in and continually upsell you. And I got to tell you, back in those days, 20, 30 years ago, there's a lot of money in training. So I learned how to do this myself. So I started with equities. I looked at futures and Forex and options. I kept coming back to this options. And even then, I kept drilling down to options on SPY and then day trading options on SPY. And when you're in about half an hour, you're going to see exactly why. But that's all I do, options on SPY, period, nothing else. So what's this all about? Well, one stock, one amazing stock, one super strategy, and one simple hour a day. That should earn you a really good living. I know it does me. Okay. The truth being known, of course, I spend more time than an hour a day because I do a lot of training and stuff. But basically, in an hour, you can make a lot of money. I'm not kidding you about this. So this was quite some time ago when we started doing this. And then what happened was, as I started trading SPY, and I got really good at it, I will admit, I started bringing home the toys, new cars, lots of vacations, new house, new airplane. And that's when people started to take notice. They said, okay, Hugh, you're on to something. What are you doing? Well, I'm trading SPY options. Well, you got to show me. And that's what started this thing. They said, well, can you put on the internet as to what you're looking to trade every morning? That's all we want to do. We just want to see what you're looking to trade. So I did that. And that's what started out as the inner circle. Every morning at around 9 o'clock, I would post what I'm looking to trade. Here it is. So all you guys can come in and take a look. And then it was, well, can you teach us? Can you do this? Can you do that? So everything from there evolved, ebooks, videos, all kinds of great stuff. But over the years, we figured out what works in both training and trading. Okay, trading and training, and what doesn't work. Now, I should tell you too, I was involved in a lot of different other groups too, and we used to spend a lot of time looking at our own stocks, options, sectors. I mean, we'd spend hours every day, and Sunday nights get together, Wednesday nights get together, Friday nights we were consumed by this. And then when I discovered SPY options, I realized I didn't have to look at all that. Basically, I just had to look to see where is the economy going today. I'm basically kind of getting down to my office at about 8:30 in the morning, and within a half an hour, I've got a very good idea as to where the market is going to unfold for the day. And so in doing so, we became pretty good at this. Why SPY? What is it about SPY? SPY is an amazing stock. It's the best stock out there. It's just the most amazing stock. The top 500 stocks are represented in this one stock that follows the S&P 500. So in other words, SPY is actually a spider. They call it a spider that tracks the SPX. The SPX would be a basket of the top 500 stocks. So what's in this this basket of stocks? Well, number one is Apple. This is by weight. Number one is Apple. We got Microsoft in there, Amazon, Tesla. It goes right down the list here by weight. And I tell people, look, if you gain nothing else from this session or any other session, know that you should, if you are going to trade, stay with good, solid stocks. Stay away from penny stocks. Stay away from that flavor of the day. For example, I mentioned that GameStop earlier. I mean, some people made some money, but I see the horror stories where most people lost. And I've been reading stories about these kids. They take their student loans, sell the car, they take their Christmas money, they take, all of this stuff, all of the money, pile it on a GameStop. Oh, I'm going to make a fortune. And they walk away penniless. And it's very painful to see that, very painful, but I truly understand how you can get pulled into this. If you are going to trade, stay with the good, tried and true. And SPY covers all of these, It's the stock that tracks the S&P 500, and it is also the most diversified. People sometimes say to me, Hugh, why don't you diversify? How can you stay with one stock? Well, I can't think of a more diverse stock than SPY. There you have it. Communications, consumer discretionary, consumer staples, they're all there. All the sectors are represented there. I'm going to step back for 1 second to this slide before, there's something I want to explain to you here. I know there's a lot of confusion and a lot of anomalies these days. Here we have COVID. Companies are going bankrupt, they're going out of business, they're closing their doors, all this crazy stuff going on like we've never seen before, and yet the stock market reaches new highs. How can that be? There's hardly a day that goes by I don't get this question asked of me. Well, the answer is very simple. Okay, in this, basically the S&P 500 is what they're talking about. If you look at the top few, say the top 5, 10 stocks, you're going to find, well, maybe basically they call them the FANG stocks, all right? There's Facebook, Apple, Amazon, Netflix is in there, Google, we've got Tesla in there now. So there's a handful of companies, and by weight, if you add up the weight of those companies, this Alphabet here, by the way, that's Google, okay? Alphabet is Google. So when you add up the weight of those top stocks, Apple, Microsoft, Amazon, Tesla, Facebook, Netflix is down here somewhere, number 19. When you add up those guys, you're going to get about 25, 26, maybe 27% of the entire weight of the S&P 500. So basically where those stocks go, that's where the entire market is going. Very important to know that. So what's everybody doing here during the pandemic? Well, they're staying at home. They're all on their computers. They're all ordering from Amazon, right? Amazon's had a phenomenal last quarter, the records shattering. All right, Microsoft, Apple, right? They're all on their cell phones. I defy you to walk the streets and find some kid under the age of 20 walking without a cell phone in his or her hand, right? We've got Facebook, Google, so they're all up there. So obviously those countries are setting records just about on a daily basis and that's why the stock is going up, and that is what is floating the entire S&P 500 to the top, okay? All right, so I covered the sectors, they're all there. It's also the most liquid stock out there. I mean, it's not every day we see 100 million shares transacting in a day, but when you get a little volatility in this thing, it's not unusual to see over 100 million shares of SPY trading. In fact, a few months ago, I was watching as it flipped over to 400 million shares in one single day. So it is the highest traded stock out there, most liquid, and you need that because you need that liquidity. In other words, when people buy and sell, you want that liquidity so you can actually execute the trade. There's nothing worse than buying something and then you can't get rid of it. It's like a roach motel. You can get it, but you can't get out, right? So why SPY? Well, it's also very affordable. You don't need to buy these expensive shares to make some money. For about $100, you can actually get in and buy some contracts. And this is what really attracted me, this high and low column here. This is on calls or puts. This one happens to be on calls, but the same thing with puts. And you can take a sample like this from pretty well any day. You're going to see numbers like this. So in other words, and this actually came from an option chain. Okay, so option chains have all kinds of numbers attached to them, including the lows and the highs for the day. So when you look down here at these options, you see some of these numbers, the lows 10 cents, the high 40 cents. The low 4 cents, the high 15. Look at this, the low 1 cent, the high 10 cents. So what does that mean? Well, it means that at some point during the day, this option was a penny and it hit a high of 10 cents. So in other words, if you had $1,000 worth of contracts and you hit that low, at some point during the day, it also hit 10 cents. You could have sold those $1,000 for $10,000. Where else can you make 10 times your money? Now look, I'm not going to kid you. We're not looking for 10 times our money. We're not even looking for twice the money. We're not even looking for, 50%. But can we not squeeze, 6, 7, 8, 10% out of the market? And that's what we do. So you can also, it's very affordable. And I'm going to show you in a little bit here. But basically you can control a lot of shares for not a lot of money. So a lot of people can get into this. And for anybody who's watching this and is just getting into the market, doesn't have a lot of money, this is the ideal stock to get into. It's also very exciting trading, very profitable and exciting. So now more than ever, why trade SPY? Well, I'll tell you, you can work, number one, you can work from the safety and comfort of your own home. In this day and age, I don't think anything speaks as loud as that. A lot of companies are saying stay at home, work from your home. Well, this you can trade whenever you want, as much or as little as you want, and nobody even cares whether you're in the market or not. If you don't see it's a good day to trade or you're not feeling 100%, don't get into the trade. But I think with these amazing attributes to trading at home, nothing could be better. In fact, when COVID hit and we're all told to go home and stay home, nothing changed with us. We were doing this many years before that. So it was just another day for us. In this business, you have no overhead or inventory to buy, process, store, or sell, especially to friends and family. Nothing to maintain in that regard. You have no employees or government agencies to appease. Years ago, I talked to a hotelier, and he was telling me he was getting into trading. In fact, he was actually selling his property. And he said that, so he started trading with us, and then he was looking to sell his property because he was actually making more money trading than he was running his hotel. And I found that to be a little unusual. He said, well, Hugh, you got to understand, I'm the last to get paid here. My cleaning staff get paid. My everybody gets paid. Everybody gets paid more. Before I have to earn a lot of money before I even turn a light on. I have property taxes, business taxes. I've got everything to pay. Supplies. You got to spend a lot of money before you can even open your doors to a place like this. And he said, I only have 55 rooms. So once those rooms are booked, I can't really make any more money. That's it. I'm capped. I'm capped for the night. And so my inventory is very limited. I have basically till midnight every night to squeeze what little I can out of all these rooms. I want to be full every night, but not too early. If I'm full too early, that means I didn't get my price. Anyway, he's going on and on about all this stuff. I said, wow, yeah, trading certainly is a long shot. Far superior than doing what you're doing. And he said, I'm a slave to this 24/7. Anyway, he was telling me about how the fire department can come close them down, the health board, all these departments, the labor board, all these people can just walk in at any time and saying, oh, you told one of your staff she looks pretty today and she took offense and now, you got a claim against you. You got a complaint. Or anyway, he says you don't have any government agencies or anything like that you need to deal with on a day-to-day basis when you're trading options. No customers to procure service or try and collect from. I think you know all this, and you can actually start with a little bit of money, earn unlimited amounts, and you can actually get rewarded for your skills. And the best thing, there are some favorable tax concessions in trading. So I can't think of a better business than day trading SPY options. Now, the power of options. You limit your risk. The moves are quick and the leverage is huge. Now you limit risk. The way we trade, You can only lose what you put into the trade. Now, you should know there are many, many different ways of trading options. And some ways you can actually lose a lot more than what you think. So you have to be very careful. The way we trade, we buy first and then we sell. We buy call options and we buy put options. An option is actually a contract that gives the options holder the right but not the obligation to trade the underlying stock for a certain price by a certain date. All right. So different ways of trading options. We do not do spreads. We do not do naked positions. You can only trade what you put into the option. The moves are quick. We try not to be in a trade for very long. Like to get in, get out, make our money, go on with the rest of our day, whether that's the next trade or go fishing, whatever you want to do. Go play golf, it's up to you. The leverage is huge, so you don't need a lot of move in SPY to make a lot of money. I love it. How to safely trade. Number 2, you can profit still in volatile times. Okay. Now, here are 2 columns, calls and puts, and briefly touched on this a few minutes ago. The leverage, you can see the leverage on some of these options. I mean, take a look here. You have, many times the lows and the highs. But even in these volatile times, there exists many times in which you can actually make some very good money in both calls and puts. Here's the difference, or rather comparison, between the stocks and the options. For those who don't know what options really are, how you would trade these. Now, I'm going to put these numbers up there. This is exclusive of commissions because everybody has a different commission rate. My commission rate is about $1 going in for both directions. Okay, so consider 50 cents to buy, 50 cents to sell. That's $1 it's going to cost me for an option, but I'm not going to consider the commissions right now. So let's say you want to control 100 shares of SPY. It's about $380 right now, let's just say. That's going to cost you $38,000 to buy 100 shares of SPY stock. Now, if I buy one contract, I can easily get a contract right now for $2.50. It's going to cost me $250 because each contract controls 100 shares. It's going to be $250. Now, let's say the stock moves up $1. That means your stock equity is going to be worth $38,100. Now, with options, there's this Greek, they call them Greeks, which is a factor that is that affects the underlying option, and one of them is called the delta. The delta is the relationship between the option and the underlying stock, and it's usually at this level, say 50 cents, 50%. In other words, if the stock moves up $1, the option moves up 50 cents. Now, you might think you're getting a little ripped off on that, but take a look. That 50 cents is on what you paid for the option. So that option that you paid $250 is now worth $300. Do the math, folks. What's your return on investment? That $100 on the stock gave you a 0.26% return versus a whopping 20% on the option if you were to take that trade. This is not pie in the sky. This happens all the time. Trading in volatile times. There's this thing called the VIX. It's a stock, actually it's a symbol. And the higher the VIX, the higher the volatility, usually the lower the price. It just means that things are a little crazy, right? They're going a little nuts. And it can be very difficult trading that if you're not really careful. And that comes with experience. Where do you get the experience? You get it with losses. Okay, so it's good to know this VIX, and you can see how the VIX rose. I don't have the data on here, but this hit a high of $85.47 back when the COVID started, and SPY bottomed out, started to come back up. But there are various points in the last year where we shot up, including recently right here where we had this shoot back to the upside here, almost 40. That tells me that volatility was high. Price of equity or of options is also high when the VIX is high. I don't really follow the VIX because I find it's concurrent, but it's just good to know for a history as to how that whole VIX and volatility affects SPY. Now, here's how you pivot to prosperity, all right? And this is very important because right now with COVID, everybody's worried. They've lost their jobs, their businesses. There's not a lot of money. You got to be very careful with how you trade. And one of the things I noticed is if you're in the stock market and you're losing your trades, it's very easy to get down and out and depressed and want to just crawl into a cave or something. But you can still make a lot of money on the stock market. So the first thing I'm saying to people is, look, first of all, stay positive. COVID's going to pass, by the way. Okay, it's just stay positive. So how do you do that? With all this news coming at us from all these different sources, and you can't even really tell, is this real? Is it fake? Is it manipulated? Is it made up? Is it what is it? And what even matters? And that's the other thing, what even matters? If you remember back last year with the first impeachment, you'd think that under normal times, the impeachment would be a big deal, but SPY seemed to have ignored the entire weeks or months of all that. In fact, SPY was seeing new record highs through that whole thing. It didn't seem to impact. These days, COVID, vaccine, all of that has an impact. So you have to learn how to separate fact from fiction. You have to know what sources to go to, where you're going to get the best news, how the news is going to affect the market. All right. If anybody ever tells you they don't look at the news, I'm telling you right now, they're foolish, because news drives the markets. You have to know what's happening in the world. All right. Separate fact from fiction, and identify a positive. Even if it's some small little thing, identify positive. Not that that's going to move the market up. I'm just saying, if you're feeling a little down and out these days, look for the positives in everyday things. Look and say, oh my gosh, the sun's shining. That's pretty cool. Could be a lot worse. I could have that nor'easter they call it, coming at us, dumping 2 feet of snow. Look, create an attitude of gratitude. Every morning I get up and I thank the Almighty for it. Listen, I am living in the best of times. Best of times. Some people will say it's the worst of times. You ever read Tale of Two Cities? That's it. Folks, I'm telling you right now, I woke up this morning. I gave the good Lord gratitude, because first of all, I woke up. I woke up, I was vertical. I'm feeling healthy. I've got food in the fridge. I got heat in my house. I got 2 or 3 cars in the garage, gas. I've got, everything's pretty cool. I've got a great family. I've got everything's cool. I don't owe any money to everything is really good. So when you create an attitude of gratitude, you actually attract more good stuff. Create this attitude of gratitude, you will attract more stuff. And if nothing else, you're going to identify the good things, and that's what you're going to focus on. Number 2, when major events happen, you got to stop and assess the market. Last Friday, something happened to push the market down. I'm not even really sure what it was, but something pushed the market down. I had some people in call options. So when you expect the market to go up, you buy a call option. When you expect it to go down, you buy a put option. The market tanked. They were going to expire a week later, and they're saying, well, what should I do? Should I sell for a loss? I said, no, hold on. Well, yesterday I'm getting all these emails. Oh my gosh, I'm so glad you told me to hold on. Thank you so much. I made a lot of money. When there's a major event, stop, assess the market. No trading until you understand the situation. Get a hold of it, then get into a trade. Just because the market's open does not mean you need to be in a trade. Then enter carefully with lower capital and lower expectations, so you're not going to be disappointed. Very, very important that you know that. Okay. All right, moving along here, and get ready. If your gains are going to be 4 to 5%, hey, take that. You're never going to go bankrupt taking 4 or 5%. Once you're comfortable with the risk, then you can move on and increase your expectations. And when you understand what's going on, then go a little bit deeper into the risk. Here's a little simple strategy you can use right now. Are you paying attention? Everybody paying attention? Okay. I don't see a questions box here, Sherry, but I assume that you do. So if there's any questions.
I'll pass them over to you.
All right. I got to put this disclaimer up. Tell you what, I'm not going to read it, but I'm going to give you about 10 seconds to go through it. Basically, it says you're on your own, pal. Right? When you trade, nobody's responsible except yourselves. Okay. And past performance does not guarantee future results. Okay. I think you know that. Anyway, let's move along. All right. So here is a cool strategy. I use this myself. Now, you're going to pull up the 5-minute chart. This is yesterday's chart right here. 5-minute chart. I have 2, folks, this is solid gold. I hope you're paying attention to this. I have 2 exponential moving averages, a 10 and a 20. The green line's a 10, the red's a 20. All right. you're going to buy right there when the 10 crosses the 20. When the 10 crosses the 20 and it holds, right? And that 10 is now crossed over 20, that's where you are going to enter right there. All right, using the 5-minute chart. Then you're going to immediately put up a sell order for a locked-in 6% gain. What did I do here? I bought the 374 call options expiring this Friday in a couple of days, looking for a modest 6% gain in a few minutes. And that's exactly what I got, 6% in a few minutes. The trade was over very quickly, and I walked away with some pretty good profit. Actually, I got more. Here's some tips. You're going to buy the at the money options, ATM, at the money options. You're not going to go on those crazy little things that cost 10 cents. Why are those call options far out costing 10 cents? It's because they're not worth anything. They're of high risk. You could end up losing your money very, very easily. You're going to buy next Friday's expiration. Now, as it turned out, I bought this Friday's, all right, because I knew the risk. I felt very confident with it. I did not mind. But for safety, buy next Friday's expiration. Immediately put them up for sale using a good to cancel GTC order. Why use a GTC order? Simply because if there's some interruption in your internet or your computer crashes, right, it happens. You don't want to be stuck holding these options on your computer. You want this to be up on the board, ready to sell, so that even if you're not watching it, there it is, you're safe, you're safe, you're safe. And you're going to aim for a very modest 6% gain. Humility, right? So, you know, if you're humble about things, you're going to inherit the earth. Isn't that what they say, right? Folks, options may fluctuate at first. Don't get all panicky if it doesn't go against you. You got lots of time. And there's that GTC sell order, good till cancel. And consider a repair only if your option drops 40 to 60%. Like a fine wine, options have to breathe. It's not unusual. It's nothing, no big deal for options to drop 10, 20, 30, 40%. If it starts getting around 40, 50, 60%, okay, something is wrong. I did a study several years ago, a very, very huge sample size, and I found that only once when an option dropped 63% did it come back on its own. So my conclusion from that was that, okay, so if it drops that much, you really need to do something with it, either repair it, and that's something we teach, by the way, either repair it or dump it, because the likelihood of it coming back on its own is pretty remote. It depends on why it went down. So there are a lot of questions around that. But generally, if you did your research on this and you're following this rule here, you should not have that situation. Number 8, very important, control your greed, fear, and ego. I found the enemy is not the stock market. In fact, the stock market's my best friend. The enemy is the person in the mirror. Funny thing is, wherever I move, that person in the mirror moves the same way. I can't see no escape it. But have a very clear understanding that it is your emotions that are the enemy, and that's something else that we really teach in our training and all that. So fear, greed, and ego, these guys are like little gremlins. When you put a real trade on, they're going to come out of nowhere and do a dance all over your head. Believe me, they are going to be the death of you if you're not careful. Be disciplined to not overtrade. Another big factor why people lose money. They have a great trade, they go back in. They have another good trade, go back in. This continues on until when? Until they have a bad trade. Then they're stuck holding this thing overnight at the complete mercy of the market, and that's when they lose. Have a target, know when to get out, know when to call it a day, right? And that's really the answers. Now, folks, here's what I did yesterday. Here's the trade I did yesterday here. So I bought 10 options here. This is from Thinkorswim, TD Ameritrade Thinkorswim. I bought 10 options, the 381 call options, bought them for $4.60. That was at 9:35 in the morning. I sold them at 10:03 for $5.25. Do the math, that's 14% in 28 minutes, or on 10 contracts, $648. I mean, how much money do you really need? You know what I'm saying? If you make, say, $500 a day, all right, for 5 days a week, and you're only going to trade 50 weeks of the year, you're going to take a couple weeks off, okay, that works out to $125,000 a year. That's not bad, okay? That's not bad for doing this. Okay. If you want to really be good at it, you can make an awful lot more. That's not bad at all. Folks, you know, when you put it in that perspective, it's suddenly, you know, it really catches people's attention. And this happens all the time with us. We do this all a lot, and our people do this a lot. It's actually pretty cool. So the big question, of course, is, well, if it's this easy, why isn't everybody doing it? And you won't believe how many times I get this asked of me. I say to them, that's a great question. You know, but I gave up trying to find out, because when I would ask people, I would get all kinds of different answers. Well, they don't know about the strategy. Well, I'll tell you the strategy. Well, I don't know. You know, they're too busy. They're too busy earning a living than to make any money. They don't understand the nuances of options. I'm talking to somebody right now, back and forth with email today about, well, he's already an options trader. He's got good experience. And what's your strategy? And, you know, he doesn't want to kind of listen. I can sense that he's going to try and tell me what he's doing. And at some point, I'm going to say, and how's that working out for you? Why are you here? And anyway, the way we trade, it has certain nuances that you need to understand and know how to deal with. Human nature is to complicate things. How many times have you been on a course or some strategy you see, and my gosh, they make it so complicated. I don't know what's going on. You know, you don't know up from down anymore. Folks, our aim is to keep it simple. It's amazing just how good it is when you keep it simple. Or they don't trust themselves or the system. I get that too. I get that. Don't trust the system, don't trust themselves. I've traded with people. I've had people come through and they just don't have the self-control. Now, we actually have, believe it or not, in our training, we actually have exercises in how to develop your discipline and your patience. In fact, I'm going to give you one right now. I like to drive fast. I have a fast car. I really enjoy driving fast. Okay. So, but what I thought I would do is I would go on the interstate where the speed is 65 miles an hour, and I make sure I'm not slowing anybody down. So I'm going to do this at a sort of a slow time of the day or whatever. So I'm not holding up traffic. But I would get into that right lane and bring it down to 65 miles an hour. And the last time I did that years ago, my wife said to me, she looked at me and said, "What are you doing?" I said, "Well, I'm just going to go 65. That's the speed limit. So I'm just going to do this for 5 miles, see if I can do it." And after about 2 miles, she looked at me and told me she had some pretty good words to tell me to go back to normal. My car likes to cruise faster, okay, 80, 90 miles an hour type of thing. But not that I advocate that, but I'm just saying, folks, it was very difficult for me to do that. But I tried that so I don't do it with her in the car anymore. But I'll do that. I'll say, okay, for the next 5 miles, I'm going to slow it down to 65 if it kills me, because I have to develop patience, and it's like a muscle. The more you do it, the better you get at it. So right now, I could actually travel 20 miles, doing 65 miles an hour if I want to. And that's one way of developing your patience. Use it as an exercise, okay? Exercise it and you're going to use it. Otherwise, you lose it. They don't have time. How many times do you hear, "I don't have time"? Okay, no time to learn how to make money. Or they don't have the inclination to learn. That's okay. We've got all of these excuses. They don't believe they have the capital. You don't even need a whole lot of money to be able to do this. There are many, many reasons. Some of them are simply not interested. And okay, I get that too. Folks, I don't care why. There's a million reasons why you're not going to do it. The important thing is, if you're interested in doing it, then you need to step up to the plate and take the next steps in becoming an expert trader. And you will become the expert trader. So what are the next steps? Number 1, commit. Commit to demystifying or simplifying options. Options do not have to be complicated. I swear people make them complicated just so you can become reliant on them and you pay them a lot of money. We teach you how to keep it simple and how to benefit from simplifying options and demystify. There's no mystery behind any of this. When you understand what comprises an option, there's no mystery at all. Number 2, learning the strategy appropriate for your style, for your goals. We get it. This isn't for everybody. That's not a problem. But a lot more people are interested in this than not. And they say, wow, suddenly, thank you. They can't thank us enough. accepting that long-term success is a process, very important. It's not going to be one simple day, one ebook. You're not going to view an hour-long video. Now you're a pro. That's not going to work that way. The longer you are in the trading rooms with us, the longer you're exposed to the markets with us, the more the more you engage and get involved with the things we do, the better trader you're going to be. That's just the way it is, just like with anything else. And aligning yourself with a competent, compassionate coach. I think this is very, very important, because if you don't have somebody coaching you, and if you're doing it alone, I don't know about you, but I never had that much money that I could, outlast my own stupidity with losses. So get in with a good coach who understands you, understands your trading, and listen to the way they teach you. Right, very important. By the way, all good athletes, actors, actresses, all those people, they all have coaches. Racing car drivers have coaches. Everybody's got a coach, folks. And then stay with the program. Find a good program, stay with it, tweak it as necessary. Don't keep jumping from program to program. So where does this take us? If you're stuck at home, you know that trading can be very lonely, but trading doesn't have to be alone. You can trade by yourself, and most of us obviously do, but you don't have to be alone. But if you have the support of a coach where you are literally an email away, I think that speaks volumes. You're going to feel a lot better, a lot more confident, a lot more positive about your trading career, and you're going to make a lot more money. So we're here to help you, folks. We're here to help you. And what I'm going to tell you about right now is that why trade with us? The answers are simple. We have the experience you need. We have the personal support you crave, the value pricing in everything we do. We're also very approachable, we're accommodating, and we are of service to you, okay? We're not here to take your money, we're here to help you trade. No hidden agenda, no costly upsells, nothing like that. We trade what we teach, and we teach what we trade. It doesn't get any simpler than that. So what do we have for you? We've got proven programs that work. Proven programs that work. All right, I actually have a traders exclusive webinar special. Because you are here, I have a very special promotion for you right now. This is that inner circle I told you about. This is what we started almost 11 years ago. In May, it's going to be 11 years that we've been doing the inner circle. And we don't talk enough about this. But I got to tell you, this is a really, really cool program. And what it does is it gives you every morning at about 9 o'clock a consolidated pre-market analysis. So what we do is we get all the news sources together that are relevant. We decipher what's important, what's not important. And then we say to you, we send you an email that says, here's what's going to happen today. In our opinion, the market is going to go up. Here's why, bang, bang, bang. Very simple, very concise. And here's what I'm looking to trade, all right? And it's going to be delivered to your inbox every morning at about 9 o'clock. Very fresh, relevant. And find out what our expert traders are looking to trade. Those expert traders, that's Alex and myself. Between the two of us, we have many years of trading experience. Later on in the day, you're going to get an afternoon market recap, including screenshots of our actual trades. And you're going to be invited to our exclusive live weekly training sessions. Live weekly training sessions. These training sessions, I should tell you real quick, these are about an hour and a half long training sessions. We answer your questions. We talk about anything and everything to do with SPY options, whether it's setting up your charts, anything at all. And we make sure that you fully understand what's going on. You're also going to preview any exclusive events that we have, and you're going to get email support for any quick questions. How cool is that? And I have a bonus for you. If you subscribe before midnight Eastern time Friday, we're going to give you a 20-minute personal meeting to set your goals and aspirations to get you on the right path. And I think that is really important. Now, I'm going to give you an example as to what this inner circle is about. But first, I'm going to tell you the cost is still only $79 a month. That's what it was when we started this. And I'm going to tell you a little secret, okay? We have these high-powered business advisors that we employ, and they're usually pretty good. And we are always at odds with these people. They always want to increase the price of the inner circle to something that is the proper price. They know, and they say they say you're grossly undervaluing it. It has to be more. But we keep telling them, no, it's not. It's $79. We're going to keep it at that, and we're going to keep it at that too. I'm going to tell you real quick, and then we're going to get out of here. All right. This was yesterday's morning outlook. Stocks rose ahead of earnings this morning as Amazon and Google prepared to release theirs, along with 126 others. SPY gained over 3 points, blah, blah, blah. Add to the mix. Here's what I'm looking to do. I may look at calls this morning for a modest 6% gain. Here's what actually happened, and this is what we send you. So we talked about what actually happened, and right here in this morning's trading room, I bought the 381 calls, sold it 28 minutes later for 14.1% gain. Then we also talked about Power Trading Pro and pick of the day. There's the screenshot of the actual trade. I showed you that earlier, and that's all it is. All right, take a look. Would you be okay with this, folks? Do you want to get this morning outlook before or after the final report, right? Okay. Folks, the Inner Circle, previewed our exclusive events, email support, subscribe before midnight Eastern time Friday. You get a 20-minute personal meeting to set your goals. So that's going to get you guided on the right path with that, okay? And that's with myself. Inner Circle, only $79 a month, basically a cup of coffee a day. Are we not worth a cup of coffee a day for all that wonderful information? And that is in celebration of 11 great years of service to you. Folks, if you need to know more, all right, I believe there might be in the chat box. I put that in the chat box earlier.
Yes, sir.
Sherry, if you want to send it along. By the way, a little bonus way here. It's kind of a fun thing. I'm also going to put in the chat box. You might want to, if you don't mind, keeping this up there for a minute or so until they can kind of get the link on this. This here is another link to a really cool video that we had done about a year ago. I just love it. It's about 3 or 4 minutes long. Folks, if you don't have the link or you don't know how to do it, email us, info@daytradespy.com, or go to the website, daytradespy.com. It's called the Inner Circle. All right, it's called the Inner Circle. And I just wanted to thank you all for joining us, and thank you, Sherry at Traders Exclusive. It has truly been a pleasure. Have a good one, folks.
Awesome. We do have one question for you so far. I'm sure somebody's going to have more.
If you have the time, Sherry. If you have time.
It is 4:02. Somebody wanted to know if you're shooting for a 6% profit and you put in your sell order. I know exactly where they were at this, where you were showing where the two lines cross, and then you got back out and you got that 6% profit. How did you make 14% on that trade?
I stayed with it. And these are other indicators that I show you on how to make a lot more than 6%. You see, you have to have a goal in mind to determine whether it's successful or not. And I've been in other groups and they say, well, it was a success. It was a success. I look at it, I say, it only went up 2 cents. How can you call it a success? Yes, it went up 2 cents, but you wouldn't have sold it. So we use the 6% as a measurement, and anything under that, we don't consider it a success, unless that's your goal, right? If your goal is to make 4%, you hit it, well, okay, then it's a success. But in my case, because I saw the other indicators that we teach you, I stayed with it and I picked up the 14%. And I did that in, I don't know, 34 minutes or something. So,
excellent.
Yeah, that's, oh yeah. Oh, no. 6% is just a target, a standard by which you measure success. And it's very easily obtainable. Okay, you can actually pick that up really quite easily. So, and I'm trying to make it, I don't want to sound like I'm dumbing it down, but I think most people can hit the 6% very easily. So that's why I'm trying to, show you in such a way. But we also show you how to make a lot more. Absolutely.
All right. Well, it's time. I hate to tell you this, but it's time. We did have a couple other questions. One was, be sure to mention the bread and butter strategy. I want to encourage everybody to go to the link that's in the chat. That way you'll get to Hugh's special offer and you'll be able to ask for that strategy and get it right away. And then also, how much do you invest daily to earn $500 a day? I mean, that's pretty subjective to what's happening in the markets, right?
Well, we do. We have different strategies. Like, so we have this thing called the Power Trading Pro, and this is, I think, what a lot of our traders want to aspire to. What this is actually a scalping strategy. This is really cool. This morning in a half an hour or less, I made $1,050. So what I would do there is I would go in for 30 contracts, and the average cost of the options was about $2.50. So I'm going into this thing with with about $6,000-7,000 on that. So, but I'm going in there for just a few pennies, so 6 cents. So I would be picking, $200-300 off each of these trades in there for sometimes seconds, maybe 30 seconds. One was 30 seconds today, and usually in a couple of minutes. And if you do, so I did 4 of those, and I walked away with over $1,000. So I mean, if you're going to trade, say 20 contracts, I mean, let's say even 10 contracts costing $2.50. So you're walking in there with $2,500, right? But if you're getting, say, the 10% instead of 6%, you are getting the 10%. Well, you got $250 right there. $2,500, 6%. Well, that's $150. But Sherry, you could do that many times during the day. So if you want to make $500, just go and do that 3 times a day, and you got $450. It's not it's not that hard to do that. It's really not hard to do that.
Okay.
When you know how to do it,
how much
right?
did you have to invest to get that kind of return?
Well, let's go back. I traded 10 contracts at $2. What was that? $2. Here it is right here. Actually, that one was
contracts at
$4.60.
$250 would cost $75.15.
Well, when I got, okay, so on this one here, I had, where would it go? This one, this would have been 12 contracts at $4.60. 12 contracts at so I paid, okay, so I would have put in about $5,500 in that trade. Okay. $5,500 to walk away with what was it, $400 or $500, $600 some dollars, I think it was. Where does it go? Right here. Let's go backtracking here. Wow, I think it was about $600 some dollars I had here. I gotta find it here. I don't want to I don't keep you here. Where's it? Oh, here we go. $648. Sorry, 10 contracts. This was 10 contracts. The 381 calls. So now I had, so I bought a week out, so I bought more time. And by the way, if you buy closer in, like if you would have bought the options that expire this Friday instead of next Friday, which is what this one was, they would have hit the target a lot sooner. Okay, a lot sooner. So in this one, I did buy a little more time for insurance, but I paid $4,600 to get into this trade. And in was this 34 minutes, I walked away, 28 minutes, I walked away with $648 on 10 contracts. So, but I mean, if you don't want to put that much in, you don't have to. A lot of people start with just a couple $1,000s, and definitely that works too. And obviously you're not going to be making hundreds of dollars, but if you're walking away with $50, $60 to $100 on a trade, is that so bad? I think if you do that times a day, you're going to be okay with it. It's actually pretty cool, folks. Just remember too, I just want to thank you all. If you want what I have, you got to do what I do. I think, Sherry, if you have any other questions, I'd be happy to answer them, but I don't want to keep you here into the afternoon. I know you had a long day, Sherry.
I think we're going to go ahead and wrap it up, Hugh. And I really appreciate you being with us. I think this has been one of the greatest webinars we've ever done, and I hope that we'll see you back again. And everybody on the call here knows that they're going to get follow-up emails from all the speakers, and there's going to be a replay set up. So I'm going to change it back here. I'm going to show my screen. This has been a presentation of Traders Exclusive webinars. You can see us at twitter.com/options_info, tradersexclusive.com. We're going to have another webinar on February 17th. We don't know who's in it yet, but we'll be here with bells on. And thank you so much, everybody. And this is your host, Sherry, saying have a great day and trade well.